Thank you, sir. I have privilege in introducing both the speakers. CA Shivshankar T R is a commerce graduate from Bangalore University and completed his BBM in PES College of Business Management. He has completed his CA and CS in the year 2007 and Diploma in IFRS by ACCA London. He has secured All India rank 12th in CS Intermediate exam in the year 2005. He has completed his articleship with MSSV and Co. Chartered Accountants and has served in MSSV and Co. in various capacities: manager, senior manager audit and taxation, partner audit and taxation. His main areas of practice are corporate audit and direct taxation. He is from a village called Huliyur, Tumkur district, Karnataka. And another speaker for the day is CA Sandeep C. Sandeep Chalapati is born in Bangalore and Bangalore. He is a commerce graduate from Bangalore University. He has done his articleship in MSSV and Co. Chartered Accountants, Bangalore, and is practicing as Chartered Accountant from the year 2015. After his qualification, continued in MSSV as manager for direct taxes, litigation, and consultation. And in 2020, he became a partner of the same firm, heading the direct taxes team. He was a faculty in many private institutions for commerce subjects for pre-university students. He is a regular speaker in all the chapters of Institute of Chartered Accountants of India, Karnataka State Chartered Accountants Association, Income Tax Practitioners Association, on topics like tax deduction at source, income computation and disclosure standards, taxation of cooperative societies, finance bills and acts, etc. With this brief introduction, I present before you both Sandeep C and Shivshankar T R. Over to you, sir.
Good afternoon, everyone. Am I audible? Yes. So after lunch, sleepy session, until unless we have some numbers and questions, it is very difficult to stop our sleep. I'll make a try, I'll make an attempt where I'll not make you sleep. Okay. Starting with this recent amendments, basically the objective of the next two sessions is learning about TDS, because a lot of amendments are there, and I definitely know that because of the amendments carried out in Finance Act 22-21, where it has an effect in the current financial year, will be the hot topic like 194R, 194S or 194IA-IB. So I'll be dealing with about 3 sections where there are amendments in Finance Act 2022, and I'll be dealing with a lot of questions which has direct practice or day-to-day practice in our profession, which will help our practice in a very easier way. So we'll start with section 194IA, payment on transfer of certain immobile property. I have summarized the entire section in just one table where it gives a lot of information and gives the clarity of the entire section. So the transaction for which this TDS is applicable is payment for purchase of immobile property, and in the section it is very clear that it is not for an agricultural land, because agricultural land which is covered under section 214 3A and B, it is not covered here. Therefore, we need not bother about 194IA in case if you are purchasing an agricultural land. Next, it was inserted by Finance Act 2013. Though it was introduced in Finance Act 2013, it started in the middle of the year 1/6/2013, that is 1st June 2013. Next, who has to deduct the tax at source? Buyer, who will be the deductor stroke payer, and he may be a resident or non-resident. That means even the buyer is from resident, he is from the US, he has to deduct the tax at source. These provisions are applicable. But in case if is a seller is a non-resident, these provisions are not applicable. As you know, as you are aware, when any income arises to a non-resident, section 195 will shoot up, and all these sections will not be applicable. And rate of TDS is 1%. It is not on certain profit or anything. It is about the consideration. Till now we were listening that it is only consideration, but now the amendment has come that consideration or stamp duty value, whichever is higher. I'll be giving certain examples for that, and I'll be dealing a lot of situations, instances, but basically the amendment in Finance Act 2022 with respect to this section is stamp duty value or consideration, whichever is higher. On that amount, we have to deduct tax at source. And what is TDS has to be deducted on entire consideration or stamp duty value, whichever is higher. There is a threshold limit which is 50 lakhs, and the one moot point or important point which has to be noted on this is, in case if it is exceeding 50 lakh rupees, it is not that TDS has to be deducted in excess of 50 lakhs, but it is on the entire amount of 50 lakhs plus whatever the excess amount. So starting with one of the key point, one of the example, if the consideration is less than rupees 50 lakh, there is no requirement for deduction of tax at source. But in case if it is exceeding 50 lakhs, the entire amount, including that 50 lakh threshold limit, is liable for deduction of tax at source. So in my first example, consideration is 75 lakhs, and the entire consideration will be 75 lakhs, and TDS has to be made on the entire amount and not only just rupees 25 lakhs. The reason behind this is the wordings used in this section, such sum, is very crucial and very important in the section. When these sums, these expressions have been used, that such sum refers to 50 lakhs also and the entire consideration also. Therefore, when I am liable for deduction of tax at source, if it is an amount of more than 50 lakhs, then the entire sum will come and not in only in excess of 50 lakhs. This is in ambiguity. There is no discussion or there is no problem in this. But we have to advise our clients that it is the total amount. And for this purpose alone, the buyer, neither buyer nor seller are required to apply for TAN. With only the PAN, you can complete the entire transaction. So section 203A, tax deduction account number, will give this kind of exemption for section 194IA parties. So in my second example, Mr. Ramesh owned a land at the outskirts of the Bangalore. NHI via compulsory acquisition acquired the land of Mr. Ramesh and paid compensation to Ramesh. Whether is it really liable for deduction of tax at source? Even though the amount is more than 50 lakhs, whether it is these provisions are applicable? No, it is not applicable, because the section is very clear that these kind of TDS, these kind of acquisitions are not liable for under section 194IA, because 194LA will take care for compulsory acquisition. So 194LA, when it is coming into picture, it overrides 194IA. As of now, I am not discussing the section 194LA, but one thing what we have to remember is, and when we are advising the client, in case if it is a compulsory acquisition, NHAI will not deduct, or in any other case where there is a private negotiations and there is a compulsory acquisition, there is no requirement to deduct tax at source. Under this provision, 194LA will be dealt with. Okay. Next is example 3. The same Mr. Raju, I think he is a rich fellow, he is purchasing a lot of properties. Raju has purchased a property amounted to rupees 52,75,000. The details of the consideration, the breakup is like this: club membership fees, car parking fees, maintenance, any other fee, and for the immobile property, 52,75,000. The entire consideration may be 52,75,000, but for the immobile property is 49 lakhs. What do you feel that on what amount you are liable to TDS, or whether it is required to deduct TDS or not? Sir? Maintenance we have to exclude. Sir, sorry, explanation to section 194IA is very clear that we have to add any kind of consideration which are paying to the seller in whatever the term it is. The section is very clear that club membership fee, car parking fee, maintenance, including advances for anything. When you are paying an advance, you will not get to know that whether that advance has any breakup for car parking or membership fee or anything else. It is just a part of the consideration for a purchase of immobile property, where all these kind of amenities, all kind of advantages will be add on to it. So it has to be considered as a consideration itself. So it is not something like a confusion thing or an ambiguous thing. It is very much available in the explanation to section 194IA itself. Sir? Sir, TDS on GST is not applicable, because it is a taxes that will be dealt on an overall basis by the circular and other provisions. GST is a part of taxes where TDS is not applicable on GST. This is not only particular to this section, for any section it might be. Okay. Next, example 4. Mr. Raju, a non-resident, owns an apartment in Bengaluru. He has given general power of attorney to an Indian resident, Mr. Mukesh, to sell the same to an Indian resident. In this connection, Mr. Mukesh assisted in selling the property to an Indian resident and finally sold the property. Just one thing is, let us assume that it is Mr. Raju is a buyer. There is a small error. Mr. Raju is a buyer. What happens if a non-resident is buying a property, whether he is required to deduct tax at source? Yes. But what is having a general power of attorney to some other, he has assigned the GPA to some other person. Whether is there any exemption for that? No. Absolutely right. There is no exemption for those people. If he is not available in the country, definitely he has, if he wants to purchase a property, he will assign a power of attorney holder and he will carry on behalf of the non-resident. That is not going to change the capacity or the burden or responsibility to the power of attorney holder. The power of attorney holder will do all those things on behalf of the purchaser, buyer. So non-resident, even though he has a power of attorney holder, or if he comes directly here, he has to take care of this provisions. And some other key points of section 194 IA is TDS has to be deducted at the time of payment, and transfer is not relevant to as TDS is not required to be deducted at the time of transfer, because if you read the section, it is at the time of credit or payment, whichever is earlier, and at the time for the purchase of immovable property, not at the transfer of immovable property. It is not required that at the time of registering the sale deed itself it has to be done. The liability arises at the time of making the payment itself, even advance payments. This has to be considered by everyone. When the advance is exceeding 50 lakhs, the entire amount will come and sit for TDS liability. And this 194 IA, the moment you make the payment, that is consideration, within 1 month from the end of the month or within 30 days from the end of the month, the liability has to be fulfilled by way of filing a challan cum return, where to ease off for the persons, individuals, the government has come with this kind of thing where form number 26 QB, it is a challan cum return where there is no requirement to file a separate Saral TDS return or anything else. It is one challan cum return, upload it and finished off with that. You will be having 30 days time from the end of the month in which the amount of consideration is paid, whether it is an advance payment or anything else. It is from the end of the month. It is just 30 days from the end of the month. Next, it is through Reserve Bank of India or State Bank of India or any other nationalized bank, you can make the payment. And this is how form number 26 QB looks like. But my concern with respect to form number 26 QB is this one. It is payment of installment or lump sum. This is the very important thing where, for example, you are purchasing a property from a builder, and over a period of 3 years you have to make a payment. You have to make payments on installments as agreed upon. And when you are paying a lot of advances which is exceeding 50 lakh rupees, then how do you comply with this provision? You have to file multiple form number 26 QBs for this purpose, and you have to select installment or lump sum. You have to enter the drop down list. Otherwise what happens, I'll tell you. In case, if you are making a first installment of 60 lakhs and where you are deducting tax at source, but you are making a payment saying that it is a lump sum amount. That means for the other person, it will appear as form number 26 is indifferently, whether you do lump sum or installment. But the other purpose for seller, the department will think that the property has already been sold. Therefore, he is liable for capital gains or business, whatever tax it is. So when you are making a payment as an installment, the government will understand that it is just an advance. He is not liable for advanced capital gains tax or anything else. So we have to be very careful when we are advising to our clients who are the buyers that when they are remitting the payments, they have to select that whether it is an advance. If it is an advance, then it is an installment, and if it is an entire sale consideration or a final transaction, then it will become lump sum. The other party seller may carry forward the TDS, he may get queries and he has to prove it's a different thing. Just to avoid the litigation, we have to guide the buyer saying that please make the payment in form number 26 UB by selecting installment or lump sum. This is very important. It is a practical situation. Every day the builders are facing it. Every year, for this reason, the cases has been selected for scrutiny and they are being asked that why you have not declared the capital gains tax. And this is how form number 26AS looks like when in the seller's 26AS, when the TDS has been deducted. This TDS of or form number 26AS of the seller will be indifferent, whether it is a lump sum or this one, but the department will be having a track of whether it is a lump sum or an advance or installment. So therefore, we have to be very careful in advising our buyer clients. Okay, so coming to Finance Act 22 amendment, what is this? Why is so important? We know that there might be some difference between stamp duty value and actual consideration. In our day-to-day life, when we are advising the clients or in our whatever the during the course of our life, we would have made the payment at 1 crore rupees, but the guidance value will be about 1.2 crores. For the fulfillment of other statutes, you will be paying the stamp duty value on that 1.2 crores itself, but the actual consideration is 1 crore. And you were till 31st March 2022, you were deducting tax at source only on the actual consideration of 1 crore you have paid, but not today. You have to pay on the notional consideration of rupees 20 lakhs, which they are saying that 20 lakhs is the stamp, 1 crore 20 lakhs is the stamp duty value, and on the 1.2 crores you have to deduct the tax at source. Even though 20 lakhs you have not paid, only for the purpose of stamp duty value is 1.2 crores, you are liable for TDS as per this amendment. And it clearly says that it is stamp duty value and stamp duty value or actual consideration, whichever is high. But in case if it is less than 50 lakhs, actual consideration is less than 50 lakhs, but stamp duty value is more than 50 lakhs, or vice versa, you have to see whichever is higher. In case if you have to escape from 194 IA, both stamp duty value and actual consideration both have to be less than 50 lakhs. Let us discuss this one with an example. Consideration is 55 lakhs and stamp duty value is 45 lakhs. TDS has to be deducted on what amount? 55, based on this amendment. The otherwise, consideration is 45, stamp duty value is 55. Same thing, because of this amendment. The reason behind this is to comply or to regularize the provisions or to avoid the contradictory between 50C valuation and amount appearing in your form number 26A. When you sell a property, stamp duty value is different and consideration is different. The TDS will be deducted on consideration. So the actual amount of consideration will be appearing in your form number 26A if you are a seller. But for the 50C valuation, you will be giving a different amount. So when it is matched based on that CPC's algorithm or whatever it is, then you will be under scrutiny. To avoid these kind of conflicts, they have done this one. We may say that it is a actual more of tax payment or this one where I don't have a consideration at all. But what they say is it is just a cash flow issue. You can claim always the TDS credit. Going to another example, there are two buyers, A and B, for purchase of a property, 50% jointly owned, 50% half of, for a total consideration of rupees 90 lakhs. And accordingly, rupees 45 lakhs is paid by each person as a consideration to the seller. So total stamp duty value is 90 lakhs for the entire property. Two buyers are there, 50% share, 45 lakhs, 45 lakhs. Whether TDS has to be made. How? What is the reason? But entire section covers only about the consideration of stamp duty value of your share, any person. So you are paying 45 lakhs. You are not bothered about another person. It may be the stamp duty value of the entire property is more than so much. A single kata, more than 90 lakhs, more than 50 lakhs. But you are 2-3 buyers where your liability is less than 50 lakhs. What about this argument? This is what the law fits into. 50 lakhs consideration for any person. Avoiding the practical things, but this is what law says. One agreement, because one property, one kata, there is single kata, two buyers, one seller. Sir? Two parties involved. Yes, transaction is 50 lakhs, total transaction is 50 lakhs. But when I am one of the party and my consideration is only 45 lakhs, which is less than 50 lakhs, how am I bothered? Sorry, ma'am. Huh?
Single phase, that's why it is to be deducted in one.
You take any argument, you take any number of arguments. I completely understood your point. You take any number of arguments, but ultimately the liability is on the deductor, on the buyer. It is his liability to see whether his consideration is more than 50 lakhs. He need not add everyone's. He need not have everyone's consideration and see that whether it is exceeding 50 lakhs or not. Going by the strictly speaking by the provision, there is no deduction of tax at source. There is no deduction of tax at source. Exactly, I was just about to come. Not even a single sub-registrar will accept this one. The moment, whether if you are 100 buyers, even if your consideration is only 1 lakh per buyer, they will say that you have to deduct tax at source. This is a practical problem which is happening. First, when you told me, sir, that is practical authority, that is as a consultation. I am consultant, I will be giving you that, yes, you deduct tax at source, you get away with it. It is just a cash flow issue. Tell that seller. He can claim that one as a refund. In his return, it is a issue of cash flow for certain period. But if you come as a litigant, as an assessee, then the law is very clear that it is about the purchaser. It is about the deductor. It is about the buyer. For him, it is if it is a consideration is less than 50 lakh, then he need not deduct tax at source. You can bring one more point saying that you cannot divide the stamp duty value into two parts, and you say that stamp duty value is also there and that is also 90 lakhs. Therefore, stamp duty you have to deduct tax at source. But ultimately, when you are a co-owner, what is your share? You have to consider that consideration or stamp duty value to only to that extent, whichever is higher. So there are two possible views, as sir rightly said. One is the practical approach where they will not allow you to register that one without TDS. That is one part. In those cases, definitely the seller will be having some issues. Second issue is this one. Second view is there is no requirement to deduct tax at source. So same thing as an answer. So next is example 7. There are two buyers A and B for purchase of a property 50% jointly owned for a total consideration of rupees 90 lakhs, and accordingly rupees 45 lakh is paid by each person as a consideration to the seller. But here please note the stamp duty value is rupees 1 crore 5 lakhs. 50% jointly owned, consideration is 90 lakhs, stamp duty value is 1 crore 5 lakhs. Two parties are there. So each one's shares will be, as a consideration will be less than 50 lakhs. If it is a stamp duty value will be more than 50 lakhs. So here we need to deduct tax at source. There is no choice. As in my earlier point, I clearly said that you cannot divide the stamp duty value, but if you see practical thing, stamp duty value, your share. When you are able to share the consideration, stamp duty value also has to be assessed in the same way, and you have to deduct tax at source on 52.5 lakhs. Yes. And form number 26 QB, assuming it is, for example, 194 IA is applicable in all kind of cases, there will be multiple form number 26 QBs. In case a property is jointly owned by two persons and such property is being sold to an individual, that is single buyer, then he'll be doing two form number 26 QBs. And in case if there are two buyers, two sellers, then there will be four forms. So it will be multiple things. In one form 26 QB, you cannot do everything for in a single transaction. And as I said, this amendment has been brought to avoid the direct contradictory and direct conflicts between 43 CA or 50 C valuation and the 26 CAs. Because as you know, today, the entire thing of a financial horoscope of an assessee will be available with the income tax department due to be based on SFT filed by cooperative banks and nationalized banks, 26 CAs, AIS, TIS, PIS, KIS, all kind of S. So therefore, they will all be having is matching those transactions with whatever the material available with him. So to avoid the direct conflict on these things, it will be there. And it is only on 1% on the in notional consideration. It is just a cash flow issue. For example, if you want to give me 75 lakhs is the stamp duty full value of consideration. Sorry, 75 lakhs is the full value of the consideration. 90 lakhs is the stamp duty value. So earlier, before the amendment, we used to deduct tax at zone on the 75 lakhs, but now we will do on 90 lakhs. So there is a issue, the difference is rupees 15,000. So it is just only a cash flow issue, and for the other party, he'll be able to take the 15,000 as credit. So the ultimate issue here is the cash flow issue. But in case if you not comply this one, you know the consequences. 201, 2011A, 271, all these things, 276F, prosecution, penalty, assessee in default, all those things. Therefore, even though the issue is maybe very small thing, the amount, quantum involved is very small thing, but the consequences are very higher. That is the reason we need to focus on these things. Coming to next, section 184 IB, where this is very important that for certain individuals where they are maybe high net worth individuals, where they are not part of any business or profession and they are paying, they are incurring rents for their personal purposes. As I said, the entire transaction, entire section will be covered in this table. The transaction is payment of rent by certain individuals or HUF, inserted by Finance Act 2017, 16/2017 applicability. Payer will be individual or HUF, where their turnover is not exceeding 50 lakhs or 1 crore as profession or business as the case may be. So here these people are non-tax audit cases, whether he may be resident or non-resident. And who is the payee deductor? Is the lessor, owner of the property. Rate of TDS 5%. Time of deduction, last month of the financial year or last month of tenancy if they are vacating. If they are only for 6 months, that means 6 months if it is a vacating month, that is the one. Or if the entire financial year, then last month of the financial year is the liability arises for the entire year, not for the certain month, it is for the entire year. So TDS has to be deducted on the entire amount of rent. Even though there is a threshold limit, the entire amount will be included similar to 194 IA, that is such sum. Sir? Sir, you have to see whether any kind of different invoice you will be getting is, because if you see the definition of rental income or rental expenses in this provision, they say very clearly that the rent includes lease, sublease, tenancy or any other arrangement for use of any land or building or both. So we have to see whether how the maintenance is being treated and what is the maintenance fees, whether it is included in the same invoice or not. All these things matters. So the individual and HUF, whoever is deducting tax at source, need not apply for TAN. For example, I am a high net worth individual where I am paying rent of 75,000 per month. For entire year, it is about 9 lakhs. I need not apply separate TAN for this purpose and do this one. Similar to 194 IA. Second is 194 IA IB4, where section 206 AA. When in case if I don't have PAN, for example, I am a owner of a property, I don't have a PAN, and I have given a rent to some person where I am collecting rent of 60,000 rupees per month, 12 months, 7.2 lakhs. Whether this TDS is applicable or not, whether this section 206 AA is applicable or not. Yes, it is applicable, higher rates, 20%. When you don't have a PAN, 20% rates. But there is one glitch here, not glitch, it is just one kind of where a limit there you should need not deduct. For example, Ramesh is an owner of a building A and Raju is tenant for the period from April 21 to March 22, which is about 12-month period. Ramesh is an owner and Raju is the tenant. The agreed terms of payment of rent was rupees 75,000 for each month, and accordingly payable is for about 9 lakh rupees for the entire 12 months period. So the section is very clear that TDS is applicable, right? Yes. But the Ramesh owner does not have PAN. Does not have PAN. So 194 IB4 says that 206 AA 20%. 20%. But in case, if it is exceeding 1 month rent, then it has to be limited to the monthly rent. For example, I'm just giving you. Raju has direct tax TDS at the rates specified in 206AA because Ramesh does not have PAN. 5%, 5% or 20%, whichever is higher. But if you see 20%, it will go up to 1,80,000. Or sorry, 1,50,000. Or sorry, 1,80,000. 9 lakh into 20%, 1,80,000. But the section is very clear that need not deduct 1,80,000. You have to restrict that one to only 1 month rent, which is about 75,000. So in case the owner does not have a PAN also, that 20% will be applicable, but it will be restricted to only that 1 month rent. Where is 1,80,000? Where is 75,000? So that is the benefit, that is the restriction they are giving in 194 IB4. And as I said, the rent includes payment for lease, sublease, tenancy, or any other arrangement for use of land or building or both. As sir rightly pointed out, maintenance fees, we have to see whether it is included in the same invoice or different invoice, and what is the purpose of maintenance, what is the scope is involved for maintenance, those things. And this amendment which has been introduced by Finance Act 2022 is 206AB is removed from this provision. 206AB. As you are already new, and where my another partner will be discussing on that section 206AB, the tenant, the high net worth individual who is paying 50,000, 60,000 rent, he need not see whether his owner is a filer or non-filer of income tax. This is the benefit they are giving by Finance Act 2022. So for the month of, taking the same example, financial year 22-23, I am paying rent of 75,000 per month, 9 lakhs to a party, to the owner, and owner he in his life he has never filed a return of income, but he has PAN. I need not see whether he is a filer, non-filer, specified person as per section 206AB for this purpose. Whatever you do, in case if you have a PAN, give it to me, I'll deduct at 5%. If it is not there, I will calculate in this way as per 194 IB4 and I'll deduct it. That's all, leave it. But prior to the amendment, you should have seen that whether he is a filer, non-filer, whether he is coming under section 206AB, 2 years of return filing, or those things. So now that burden has been taken away by from the buyer, from the tenant. So this is all about 194 IB. And one more illustration. Ramesh is an owner of a building A and a non-filer for return of income covered under section 206AB, and Raju is tenant. As I said, there is no requirement to see whether he is a filer or non-filer or a specified person under section 206AB. And the important section, you may think that it is applicable only for some auditors who are dealing only with the cooperative societies, but wrong. You are any person, any assessee who is dealing with cooperative society as a member, as a non-member, as just a depositor or loan holder, borrower, all this, everyone has to focus on this, because Finance Act 2022 has changed a lot. This may not be sometimes applicable for rural cooperative societies because they are in a small scale. But when you see a cooperative society in our Bangalore or Mysore or in any kind, these kind of cities, the volume of those cooperative societies are huge. The income what they will be earning is huge. Therefore, it is very important that you focus on this one, because even if any of your clients are depositors in any of the cooperative societies, for them this may be applicable. You may not be liable to deduct tax at source, but the thing is, for those customers, they will have a track that how the TDS applicable is happening and when it will be applicable. So the amendment has been brought through Finance Act 2020. What it says is, whatever the exemptions available with cooperative society, cooperative bank, primary agriculture society, cooperative land mortgage bank, etc., all cooperative societies and bank. In case, in the preceding financial year, if their turnover, which is very clear that interest receipts from the members, is more than 50 crores in the preceding financial year, then all those exemptions are taken away. All those exemptions are taken away. For example, I am a cooperative society in Bangalore. In the preceding financial year, 31st March 22, my turnover, my receipts, interest receipts from members is exceeding 50 crores, assuming 60 crores, then in this current financial year, I have to deduct tax at source on the lot of payments made to the members in the form of interest. So till last year, whoever your clients are depositors, when they are receiving interest, there will be no deduction of tax at source at all. But suddenly when they see in this year, 26 years, lot of TDS deductions will be appearing because of this reason. And as I said, it is not only for a cooperative society, it is for cooperative bank, primary. You give any name under section 194A, those cooperative societies, banks and all, for all of them, this is applicable. So I have divided these two situations. One is where after the amendment itself, where the turnover is less than 50 crores of a cooperative society, cooperative bank, all the deductors who are in that nature, who are in that branch is less than 50 crores. And case 2 is more than 50 crores. So there are 12 situations. The first situation, first and second situation, it is a cooperative bank. A cooperative bank is paying interest to anyone, whether may be member, non-member, anyone. They are paying interest on time deposits. There are a lot of definitions for the time deposits. As you know, time deposits, let us say for an example, it is fixed deposits. Fixed deposits, if there is a limit of 40,000 rupees and for any person, and if it is a senior citizen, it is 50,000 rupees. Then TDS has to be made in case if it is exceeding that limit. Whether if it is a cooperative bank, even though their turnover is less than 50 crores. This is for cooperative bank. Next, cooperative society. Any non-member. If I am a non-member of any cooperative society, I don't have nominal membership, regular membership, associate membership, anything. Go there, deposit money, I am getting interest, anything. I am getting more than 5,000, then they will deduct tax at source from my interest income. For a cooperative society, non-member. This is very, very important thing where member, the cooperative society is the payer and the member is the receiver, that is who is receiving the interest income. No limit, any type of deposit, no deduction of tax at source. Cooperative society, membership, cooperative society and member relationship. Any member, nominal, associate, regular member, whatever it is, cooperative society to member, no restriction, no TDS on anything. But a cooperative society and another cooperative society, no restrictions, same thing. A cooperative society to a cooperative bank, no restriction. So the relationship between cooperative society member, cooperative society, another cooperative society and cooperative bank, all these three things are lies in no limit, any type of deposit, no liability to deduction at tax at source. Coming to the last but one part where primary agriculture credit society, primary credit society, cooperative land mortgage bank, land development bank, all those things, any person, no limit, any type, nothing. So earlier one it is cooperative society, now it is any kind of cooperative society, small societies where their turnover is less than 50 crores, no limit, no type. If it is a cooperative bank, other than time deposit, for example, savings bank, no limit, nothing. So as you can see, for a cooperative society having turnover less than 50 crore in preceding financial year, everything is exempted. Most of the transactions are exempted. Coming to case 2, this is a very interesting point. This one is similar to the first point, whether it is a cooperative bank or whether it is 50 crore or less than 50 crore, the same thing. But coming to this third part, whether it is a cooperative society and member, now the entire equation changes. Cooperative society membership relationship, cooperative society, another cooperative society to cooperative bank to cooperative society, all these categories only 40,000 limit. Only 40,000 limit. So here, and even today cooperative societies, cooperative banks, they are receiving notices because they have not observed this one. They are receiving the notices, and now even in the depositors 26 years, suddenly lot of 26 interest income is appearing where they had not disclosed to the auditors at all. Today it is coming. They are saying that, sir, 10 years back itself I had deposited. Today I got this TDS, and you please declare it as income. Coming to again the same thing, small societies where they have having agriculture society, land mortgage bank, all those things. Again, 40,000 or 50,000 limit. Any member, any person, whether it is member, non-member, anyone, 40,000 or 50,000 limit as the case may be. So with this, I conclude this my sections. If anything is there, I am okay with the questions. If any questions are there, and I'll be there so that I can take the questions also, even in subsequent sessions. Please. Can you come again? Can you repeat this one? Okay. Okay.
And it is coming 55-55.
Okay.
And the person C who is buying it, the buyer deducted, which is 1%. But while paying it, he is paid for only 1%, the complete TDS.
Okay.
And in 26 years, it is reflecting to only one person as a consideration received.
Seller is only one person.
Seller joint property.
Joint owners. Okay.
So the buyer deducted TDS of 1%, but paid the TDS with one PAN number
Yes.
of a person A.
Yes.
So the 26 years is reflecting in only one for 1%. It is reflecting the full consideration. But in TIS, the information gathered from the sub-register office, it's coming 55-55.
Okay.
So if I file the return, I mean, by showing this as a capital, capital gains.
143.1.
Exactly. So how to handle this type of things?
Sir, with respect to 143.1, there are three situations. One, you have to apply for a rectification return with the CPC itself, which is not possible because they ask only for two things. You can do only two things. One is reprocessing of the return, whatever you have filed, and rectification of the return figures, and you can do it. But here, you don't have any mistake. It is not your mistake. So this is ruled out. Next, you can request the CPC to transfer the case to the jurisdiction assessing officer, prove that this is the case, and all these records are on record. Therefore, I am not liable for entire thing. This is second. Third, by the time you get the 143.1 intimation, there is already 143.2 issued. Because you can understand that for 31st March 22, return, you have filed the return now, and in the next June itself you will receive the 143.2 itself. So sometimes there is a possibility that you will get the 143.1 after getting the 143.2 notice, that is after picking up for scrutiny. There you have to write a letter to the NFAC saying that you have issued 143.2, now I am not able to go for rectification against 143.1, and without asking me you will take the 143.1 assessed income itself in your assessment order. But while doing that, you please consider this submission where it says that my consideration is only this much, and this is the error happened because of the buyer. Therefore, you please consider this mistake, and when you are passing the assessment order, you don't take the 143.1 income, you take my return income. This is the request you have to make in response to notice under section 142.1. And for a safer side, make an application under section 154, manual application with the jurisdiction assessing officer, even though he does not have any power. Strictly speaking, by law he has power, but his system does not allow him because of the ITBA and NFAC procedures. But for a safer side, make an application under section 154, so that in case if the NFAC does not take that thing in its 143.3, you can always pursue that one in 154 before the assessing officer. This is a practical solution.
Then what to do with the TDS? The first person
You
is
claim
entitled
only
only
to the extent of
50%.
what is your income.
And then the remaining amount?
Remaining amount cannot be done. It is just loss.
But the other person has, I mean, the same process, whatever the process you just told, I'll follow for the person A to whom it is reflecting. And the person B is also suffering with the same problem. So for the same, that other person also had to do the entire process, and I had to disclose the amount there. And there I'm entitled to claim the TDS, which is not claimed by the person A.
Yes, in your return of income, when you're doing that one,
Right.
you have an option in your TDS, this one portion, where in case if it is not your income for this year, or if it is not in your income, then you have to give the details. So you can give those details and you can fulfill your obligation.
And
So other party will be having that advantage.
no, it's a wife and husband. You can't say other person.
Okay. No, you initiated the example with other person. How do I know that it is husband and wife?
No, I am saying it's just lost. I mean, if you're
No, that is the
like-
reason I gave you that practical solution. In your return and your wife's return, I don't know who it is, whether it is your own
not
case.
mine, but client's thing.
Okay, husband and wives.
Right.
The husband, if he is getting the entire consideration in his name, he can just fill up those details in his return of income with respect to TDS portion, and the same thing wife also. We are saying that it is my income, my TDS, it is going to my husband. Therefore, this is the PAN number. The income has to be shifted and TDS has to be shifted.
Thank you.
Yes, sir. Form 26. Return. In case if. No, form number 26 QB cannot be revised. Exactly, this problem arises.
Certificate. Without that, we will not give you the possession. So most of the buyers, they are deducting TDS in the last year, and now we claimed the DDS in the last year, but our income offered in the last year is less because we are offering income as per the percentage of completion method. Now we received the query, okay, the TDS is more and income is less if we compare 1% like that. So what to do about that?
Sir, in the final year, whatever the TDS is applicable, I say that you claim it. And you have to, definitely it is a part of litigation where it definitely say that you have not declared that much of income, but you have declared higher TDS just because it is appearing in your return. In case if it is a subsequent year, you have a choice that you can transfer, carry forward to the subsequent year. But it is for earlier years where you have already declared the income. So you have to prove that this income has already been declared. Just because buyer could not deduct the tax at source, you take the action on him on 2011A or whatever that assessee in default. But I have declared proper income, but TDS was not available that year, but it is available this year. And you have to satisfy them that over a period of time, you have declared the entire income corresponding TDS. Only thing is TDS is being claimed in this year. That is the only thing where you will get relief.
Okay, sir, that 194 IA, that on advance payment, the TDS to be deducted, but deal or registry not happen, what will be happen to the TDS?
Sir, TDS amount will be there itself in the 26 AS itself if they are carry forwarding. And you have one concept of where if you are in the subsequent transaction where you are taking that amount as income, because once the amount is not given back, that will be your income itself, so that you will be adding that as income. Assuming in your example, you have taken 75 lakh rupees, they have deducted 75,000, but you have given back 75 lakhs itself to them, then it is your loss, that 75,000. You cannot claim it because the transaction is not completed. This is first. Second scenario, in case that 75 lakhs, you keep it and you give 74 lakh 25,000. That is the only option left. In case if the transaction is completed by giving back the entire amount 75 lakhs, then you cannot claim this one. Whether we can claim in the subsequent claim a refund. Sir, we can claim a refund. That is also one another option. Yes, ma'am.
So what would that 50,000 which I have shown it as a carry forward, which is as a sale advance in my books of accounts, how we can refund, get the refund for that?
Because the transaction is cancelled, therefore you are eligible for refund. When you take the deductor is eligible for refund.
But the deductor has not done it. No?
Sir, form number 26A you apply, sir. Form number 26A. Form number 26AB has to have applied, and you can claim the refund.
Sir, if it is a person who is a purchaser, he has deducted and he will be taking it back. But sometimes what happens, as he said, we paid it. See, we taken 1 crore advance and we paid back the 1 crore.
Entire 1 crore.
Yeah, but this is for a 4 years or something like that. The 4th year, the first year when we have taken it as advance, we showed it as it is not the income in our 26, whatever AS it is there, we have postponed it. That the carry forward is keep on happening, and the transaction we sold it to another property, but the 50,000 which was there in our account, no, that we cannot take it back from the government.
Whether you are a deductor or you are
I'm
a buyer or a
deductee.
seller.
I am the seller.
Seller, that means whether you are asking that whether I can take that advantage of that 50,000 rupees.
Yeah,
I can take. No, you cannot take.
that it will get lapsed.
Yes,
Or
yes.
but it will be keep on coming in that.
Yes, it will be
this
keep on
thing,
coming.
no?
It will be keep on coming.
It will be reflecting. It will
Until
be
unless you carry forward it
Yeah, no.
in your return of income.
In our return of income in the first year we have carry forwarded it, till the fourth year it is carry forwarded, and the thing is the property is been sold to other person, and the 50,000 whatever the first person has deducted, it is still carry forwarding in our return of income. How to wipe it off that?
You cannot wipe it off, and you need not carry forward every year until unless you fill those details to carry forward. It will be carry forward.
No, see,
Otherwise, it
suppose
will not carry forward.
It is carry forwarding in, like if you are using the Winman software, no, it is automatically carry forwarding, but we don't have an option to remove it.
Then you don't file the Winman software. You you
Okay.
take directly ITR itself.
Directly without taking that 50,000,
Exactly.
we have to keep.
Yes, you take directly ITR. You go download it. You can do it. Sometimes your Winman will allow. Sometimes your Winman will not allow. So the only option is avoid Winman and take this only for that return. You take the ITR download from the income tax website and you have to fill it up.
Sir, on this advance amount that you said, like we
Where
have
is
to,
it?
here, sir.
Yes, sir.
Sir, on the advance amount, you said like every time when we make the advance payment, we have to deduct the TDS. So is there any threshold? Let's say if I make 1 lakh rupees or like 10 lakhs rupees, do we have to deduct the TDS? Or it's like if it's advance is exceeding 50 lakhs, then we have to deduct the TDS?
Sir, it is. See, one thing is ultimately you know what is your entire consideration. Total consideration, it is exceeding 50 lakhs. So if in the first tranche it is 10 lakhs, it is at your option. You need not deduct taxes. But the moment if you exceed it exceeds 50 lakhs, you are liable for TDS. So the department will come behind you saying that you knew that the entire consideration as per the agreement it is more than 50 lakhs. So the liability for you arises from the rupee one itself. First rupee itself.
But what happens, most of the clients, they are not aware of this one. They come only at the time of registration, they
Exactly.
say, okay, yeah.
It is a mistake. Yes. I am not saying that once it is done, I am discussing only about the law. The law is very clear that in case if your consideration is more than 50 lakhs and you are aware of that consideration from the day one, and that liability will be applicable under section 194A from day one, from rupee one. Okay, but the client, what they will do is after paying 50 lakhs, they are coming after 1 year or 2 years. I understand. For them, that 2011A is liable. But the practical problem here is if the client has come from beginning itself, you can deduct it. Otherwise, they are liable for 2011A interest.
Got it, sir. Thank you.
Yes, yes.
All. So, sir, can I know how much time we have for tea break? Another half an hour? We can break for 4:30? No, what is the time now? So, we have another 20 minutes? Half an hour. Okay, so then we will do 194 hour. Okay, so Sandeep has discussed 3-4 section what is last 3 years there is amendments have come. Rest of the amendments, let us see that. So these are the amendments which it has come in, which I am going to cover: 194R, 194S, 194P, Q, 206AB, 206 CCA, 194N, 194P, 194O, 206 1H. And there are some few circulars and notifications. Let us see 194R in the first place. This is something more hot topic for the time being. So these are the things. 194R, highlights of 194R. Any person who is providing benefit or perquisites to other person, then 194R is attracted, introduced in Finance Act 2022 with effect from 1st July 2022, and the deductor should be who is a business person, more than 1 crore rupees turnover, or if he is doing the profession, then it is more than 50 lakh rupees, then this provision is applicable. Otherwise, it is not applicable. the payee, deductee is resident. It should be resident. If he is a non-resident, then we will go to 195. So hence, if the deductee is a resident, then only this provision is applicable. So rate of tax is 10%. The same thing, credit or payment, whichever is earlier. So you need to deduct a TDS, and the TDS to be deducted on value of the entire value of the benefit or perquisite. The threshold limit is 20,000. See, now before going to anything further, let us see what is benefit or perquisite. In the Act, it is not defined what is benefit or perquisite. Let us say, for understanding purpose, today we have come for conference. What is the entry fees? 2,000 rupees? 2,000 rupees. Now they have given a nice bag. Whether it is a benefit without going to threshold limit for the time being. Is it a benefit? Yes? It is not a benefit? They already included in my cost price. But whether they already promised you saying that we will give you a bag? It is promised? It is, it is promised? Okay, assuming it is promised. So then I would say it is not benefit. If it is, because our understanding is you have come here to listen to us. And incidentally, you have got this benefit. Hence, according to me, this is considered as benefit or perquisite. Right? So, a father gives 25,000 rupees check to son. Whether it is a benefit? Why? I have not come to the section yet. So, I am discussing only benefit or perquisite. What is benefit? Giving 25,000 rupees donation to somebody is benefit. Scholarship giving to some children, 25,000 rupees or 50,000 rupees, whatever, is a benefit. It is benefit. So, virtually, they have not defined what is benefit or perquisite. So, we need to take a call based on the circumstances, the way we look at it. But the only catch is, we will come to that section later. So, why this 194R is introduced? The person who is providing the benefit is always used to claim as a expenses in his books. You see, any cement dealers, you know, so they will be taken to foreign trips, gold coins, silver coins, whatnot. So fertilizers, pipes, cement dealers, pharmaceuticals, there is no limit. So where they used to claim it as a deductions, other way, other party never used to offer it as an income. So there is a huge leakage of income over expenditure. So to capture this or to widen the tax net, they brought in this 194R. So the limit is very clear. It is 20,000 rupees. The deductor, we know that if he is a more than 1 crore rupees turnover or 50 lakh rupees, in case of profession, then he has to deduct tax at source. Whether any benefit is given by employer to employee, whether it will come under the provisions of 194 or no, because it's already covered in section 17, read with section 192. So hence, any employer and employee relationship related benefits, it will not come under the ambit of 194R. The sale of goods at a discounted price, assuming my price, MRP is 100 rupees. After 1 month, you have achieved 100 crores turnover, I will be giving 10% discount. First of all, is it a benefit or not? Is it a benefit giving a discount? So whether 194R is applicable? They say 194R is applicable because to remove the difficulty, so through circular they have exempted, because what I am collecting, net collection from the customer after the discount, so then there is no benefit or perquisite. Accordingly, if it is discount or rebate, 194R is not applicable. See, Section 194 are applicable only if you do through a business connection. If you give any benefit through a business connection, then only 194R will come. In earlier example, what we are talking about, husband giving to wife or father giving to son, though it is a benefit or perquisite, there is no business connection, hence 194R is not applicable. If there should be a business connection, then only 194R is applicable. Okay, now the fact that we established that there is a benefit or perquisite, how do we value it? Sometimes we will get a chance. Okay, whoever winners, we will have a dinner with Aishwarya Rai. Okay, so the cost of dinner, even if you take it to Taj Hotel, are 5,000 rupees. But the cost of celebrity who comes here to take that, ribbon cutting or whatever, she would have taken 50 lakh rupees for some opening of some shop or something like that. So, what is the value of benefit or perquisite? Then it is considered as fair market value. What I will get it in the market, what is the benefit, that is considered as my value of benefit or perquisite. Assuming I am purchasing some items and I am giving it to you, then my purchase price is considered as my value of benefit. If I am manufacturing, then what is the price charged to other persons is considered as benefit or perquisite. According to me, there is no much complication in valuation of benefit or perquisite on the face of it. Whether GST required to be taken, so they told that GST is not required to be considered for the purpose of 194R. To that extent, we are happy. Next, is it necessary to prove that the person who is receiving is offering this income or whatever the benefit is taken, or whether he is in the business of any business where he has to offer this under section 28(4) of the Income Tax Act? Is it necessary whether I need to see the deductee what he does with this benefit? Is it necessary? It says no, circular says no, irrespective of whatever you do, the deductee's part you need not, you have to ignore, virtually you have to ignore. Many times we see, so somebody is very happy with some preachings of some Swamiji, they'll give go and present one car. Okay, Swamiji, how he computes the head of income doesn't matter for us. So as long as you give any benefit, then you have to do 194R. So you need not look at what other person will do with that benefit. Be it gold, car, travel, concession, leisure, anything. Whether reimbursement of out-of-pocket expenses is a benefit or perquisite. Reimbursement is perquisite or benefit? Sandeep will always go to Delhi, Chennai for tribunals, and he'll book the tickets. Ultimately, he'll get a reimbursement from the clients. Whether this kind of reimbursement is a perquisite or benefit? Yes or no? I didn't get you, sir. Okay. Anyhow, if I am charged as a fees, 194J will come. So, the question of 194R will not come. Okay. So, I am claiming as a reimbursement and not as a fees. I will submit a bill. Yeah. So, now, CBTT circular says, if the invoice in the name of the service recipient or service provider, in my case I am service provider, the company is a service recipient. If I book the hotel in the name of the company, then it is not considered as a perquisite. If I book in the name of my name and I will claim as a reimbursement, then they say it is perquisite. But however, I am not able to understand the logic behind it, but they have given some logic. I will tell you what is the logic. But ultimately, what I want to know whose responsibility to incur these expenses and ultimately who is paying it. Ultimately, if the company's responsibility to reimbursement, whether bill is in my name or somebody's name, it does not matter. That's what. So that you are reimbursing because you are paid. You are paid, you are reimbursed. That is the logic they are giving in the circular. Since it is in the, what they say, if it is in your name, because GST portion is involved, because in your PAN number or in your GST number it is involved, so only you can take an input credit. Other person cannot take an input credit. Accordingly, it is your expenses. Hence, whatever the reimbursement you are claiming for expenses which is in your name is considered as 194 or accordingly benefit or perquisite. So you should be careful. So while you are booking your travel tickets or any of the tickets or hotel for reimbursement, you need to book company's name so that 194R is not applicable. See, the problem is not deducting 194R. Ultimately, what is happening? I am just collecting the money. So they will deduct TDS at 5% unless I offer that amount under section 198 and 199. If I have not offered that income as that amount as an income, I can't claim a TDS. So that is the major problem. So to claim a TDS, I necessarily offer that as an income. First of all, is it my benefit? What benefit I will get if I go to some Chennai tribunal, Bangalore tribunal somewhere and incur expenses and claim a reimbursement? So the question of logic does not matter here. So the only thing what we have to look at is whether invoice is there in the name of the recipient or service provider. If he is a recipient, then it is not 194R, otherwise 194R is applicable. Assuming I purchase 10 bags of cement, they told 2 bags cement free of cost. Whether the 2 bags cement free of cost is considered as a benefit? Benefit? No. Anybody yes? First of all, without going to 194R, whether it is a benefit or not? Yes, it is a benefit. Now I will come to 194R. Whether it is a benefit within the ambit of 194R? No. Business relationship is always there. In 194R, it is applicable only if it is business relationship is there. So whether 194R is applicable on 2 bags cements given at free of cost. It is the terms of sale is there. It is the, when we go to shop, they will say 1 + 1. Then only we will go to that shop, right? So the deal is always there. So 10 bags cement, if I purchase, they will say 2 bags, then only we will go and purchase. So terms of sale is always there. It is not a benefit. Okay. So what CBTT circular says, no, it is not a benefit because the 10 bag cement cost contains these 2 bags also. Accordingly, so assuming for 120 rupees if I charge for 10 bags, that means if I am giving 12, so that I need to divide among 120 divided by 12, not 120 divided by 10. So what it says, the cost of 10 bags includes these 2 bags. Accordingly, so 194R is not applicable. If you give the same item, now I will come to other example. So this is mostly given in almost all. 1 jamun mix, you will be given on steel bowl. Steel bowl or spoon or whatever, name it. The steel bowl, whether it is considered as benefit or perquisite. In first place is benefit or perquisite? It is benefit or perquisite. Whether it will come in the ambit of 194R. Why? The same logic is applicable because the steel bowl cost I already record from jamun mix. Correct? Huh? So here also I have, see, to give 2 bags cement I need to produce. So the additional cost is always there in cement as well as steel bowl. The only difference here is I am purchasing here and I am manufacturing. So there may be any number of instances. I may manufacture, some I may not manufacture. I am taking this small example just to make it understandable with respect to concepts. So whether this steel bowl, whether I need to deduct tax at source or not. Okay. If it is internally connected, what advantage? No. Assuming, I will say, if you buy 10 bags of cement, I will give 1 bag of sand. No. Sir, if I am not willing and then sending anything out, GST department will catch me. So, even if I give it at free of cost, I need to have the bill with zero value. So, that is ruled out. So, now, the steel bowl, whether it is benefit or perquisite? No, it is not benefit. It is not perquisite. 194 is not is applicable. Sir, you will buy this brand because you will get this bowl. See, here in MTR Jamun Mix, very good example. Whenever you go to Jamun Mix, any purchase, I have seen, 1+1 offer will be there, always it will be there. Purchase 1 Jamun Mix, 1 more Jamun Mix, free of cost. Or 1 steel bowl. Or if you see, family pack ice creams, 1+1 offer, anytime you will get it. Okay, so what is the difference between 1 Jamun Mix with 1 Jamun Mix or 1 steel bowl? Because cost remains same, assuming, I am just giving for the purpose of example. In this case, CBDT says, yes, 194R is applicable on giving steel bowl. Because MTR not in the business of selling the steel bowl. So if you are in the business of selling the steel bowl, then 194R is not applicable. If you are not in the business of selling the steel bowl, 194R is applicable. So what they are trying to say is cost of goods sold. When it comes to cost of goods sold, like cement means whatever the free gift water, whatever it is also, it will come through inventory and it will sit in the cost of goods sold. The steel bowls what you are giving, so it will not go to inventory, it will come under business promotion expenses. You will show it as a business promotion expenses. As per the CBDT circular, it says that you need to deduct 194R. Yeah. Yeah, I will come to many of these things with respect to 194R, where I will not even understand that whether it is first of all it is a benefit. Because I am paying for this, they are not giving it free of cost. Because my Jamun Mix cost is already included there. I will come to the practical difficulties in implementing 194R. I will completely with you with respect to the CBDT circular is completely devoid of any merits. But ultimately, so at the time of planning or deducting, I can't take this position. Only when it comes to Sandeep, for litigation, he can take all these things. No, come to that 20,000 rupees limit later. So I will come to that, how to do it. Here it is their example. See, this is the supply chain. Here is the supply, how it will happen. The manufacturer, wholesaler, retailer, customer. This is how the supply chain will happen. In manufacturer is only one person, assuming he is giving 10 crores of free gift or 10 crores worth of bowls. Then TDS has to deduct at 1 crore. There are 5 wholesalers, 2 crore each. On that, you would have deducted at the rate of 1 crore. Then they will in turn deduct at 10 lakh rupees, 20 lakh rupees. Ultimately, by the time it goes to consumer, so 194R is not applicable. You see the practical difficulty. MTR manufacturer sold to 5 wholesaler at 2 crore each. You have to deduct TDS on them. Because I need to see not the ultimate beneficiary. I need to see deductor and deductee. Who is my deductee? Who is my buyer? So I have a business relationship only with wholesaler. I don't have a relationship with the consumer. So the manufacturer has to deduct a TDS on wholesaler. Wholesaler has to deduct a TDS on retailer. So assuming we deduct the TDS, no problem. Now the question is, what entry I need to pass in the books of accounts in the wholesaler? 2 crore rupees, inventory account debit, income account credit. That is the entry we have to pass. Any better entry? To claim the TDS, because to claim this TDS, I need to show as an income. Otherwise 199, 198 will not allow me to get a deduction. Next, when I give this as a gift to or a benefit to my retailers, what will happen? Whether that, can I claim it as expenses? Now I need to file one more notional entry saying that expenses account debit, inventory account credit. So there is a 2 entries has come. One is income and expenditure in the form of to comply with 194R. Otherwise they will not allow me to claim the TDS credit. TDS credit is not small amount. It is a 10%. Now, after all these things, now income tax is over. So GST department, you got some benefit. So why you got the benefit? You have provided some service to your manufacturer. Then it is considered as a supply service. So supply means you need to raise an invoice on some manufacturer and collect the GST. The person is given a gift something, over and above you are asking 18% GST on that and raise an invoice. Market value, fair market value. You need not worry about the consideration because he will deduct the TDS. So whatever the value he says, that is the consideration for you. So this becomes a complication in the same item without my benefit. It is passing on through different chain. So thereby on the same item of benefit, it is passing on 3 layers. 3 times TDS is getting suffered. I am taken only one meager small example. I don't know how this complexity has been handled in real life situation, because the same item will not be given as a gift. Many times it will be given different items which they are not in that business. Along with Santur, they will give pen. So you will never get, Santur will never in the business of manufacturing of pen. Hindustani Unilever, I don't know what kind of benefits they will give. So I don't think they are all in the business of trading in that kind of goods. Now applicability of free samples. This is also a very hot topic. Free sample distributed, whether it is a benefit or perquisite. Now what we have seen is giving something free along with some other item. We can say tie-in sales. You buy this, you take this. Now you need not take anything or you need not give anything, give a free samples. Whether it is considered as benefit or perquisite. A pharmaceutical company gives 100 strips of Dolo 650 tablets to free of cost to doctors. Whether it is a benefit to doctor, so then you should not go to the doctor at all. Because 100 strips of Dolo 650 is consuming himself or his family. So he is not able to identify his disease for himself. What treatment he can give? So definitely that may not be okay. So with respect to our pharmaceutical company gives some cancer drug free of cost to the doctor. Whether it is a benefit or perquisite, cancer drug. What is the difference between Dolo 650 and cancer drug? Both are drugs. Next, free samples of animal husbandry products distributed by manufacturers to vets or doctor to distribute to the farmers. Normally they will give product, give it to them, kindly check what is the efficacy of the product, how his product is working, so that once you give some free samples, they will use it, ultimate customer, and come back and make second purchase. That is the use of or the purpose of doing the free samples. Now, the following points you require to be considered. First of all, whether it is a perquisite or benefit by giving free samples or taking a free sample isn't first principle whether it is a benefit. Cancer drug, how it is my benefit unless I have a cancer? So first of all, it is not my benefit. It is a free sample is given. Next, free sample given and doctor and vet. The vet, the person who is giving some animal husbandry product, he can't eat himself unless he has some other cows or something, so he can give it to them. Otherwise, he has to distribute to farmers. What he is doing is only favor by collecting and distributing. Next, free samples come with not for sale. Sample not for sale, definitely there will be tag. That cannot be sold outside the market. If that being the case, how do you value? What is the market value of free samples? According to me, 0. So that will come under threshold limit of 20,000 rupees. So TDS is not applicable for these free samples at all. Any free sample, according to me, if it comes with sample for not for sale, is not considered as benefit under section 194R. That is my view. So, but, however, in Karnataka, so Pharmaceutical Association, they have filed the writ petition to the court saying that this free sample, first of all, that they have challenged the CBDT circular. It is totally illegal with respect to taxing the free samples, because the objective of giving the free samples to understand the product, know the efficacy of a product, how the market reaction, see how we can able to much better develop this product. So that the moment you say that the person who is receiving as a doctor becomes his perquisite, doctor will not entertain any of the medical representative inside his cabin. Because the moment is 194R, he has to give PAN number, that is the first thing, or Aadhaar number, and is a free sample. Free sample ke liye he can't deduct tax at source. Then I will come to that when there is a 194R given in kind, how to do the TDS 194R, how it will be applicable when there is a 194, when the products are given at kind. So virtually free samples, according to my view, it should not be under the purview of 194R. However, the CBDT circular as on today it stands, it says it is a benefit. See, that is what they do is different. Whether it is doable. So free samples cannot be sold. That is what we understood. No, first of all, if they are charging, first of all, that is against the medical regulatory authority. They should not take anything which is in the form of benefit. They should not take one, even one mobile phone from manufacturer. That is the purpose of bringing this 194R. The whole purpose is all these doctors, whatever the benefit they used to take, to curb that practice only they have brought in. Sir, can we continue after coffee? Yeah. Okay, I think so we can continue after the session. Thank you. Can we start? Any doubts are there? As of now, whatever, can we take some questions? If is there any questions with respect to whatever you have covered until now? Any questions are there? I am happy to. Yes, sir. Huh? I didn't get your question. See, turnover definition 1 crore rupees. I would rephrase that question in such a way that, okay, whether GST required to be added for the purpose of turnover. See, because the turnover depends on different person के लिए different meaning. If it is a cooperative society, only interest income is my turnover. Investment income is not my turnover. If I am a dealer in cement, my sale of cement is my turnover. If I am taking input credit or not taking input credit, assuming I am a composition dealer. Composition dealer, I am not collecting VAT separately or GST separately. I am collecting along with my sale price. I am adding to my sale price. Then including that amount is considered as my turnover. It depends on each person to person and method of accounting employed. If you are a cash basis of accounting or a mercantile basis of accounting. As a firm of chartered accountants, we are allowed to maintain cash basis of system of accounting. However, GST you need to pay as per accrual basis of system of accounting. We follow that. So, in that sense, you need not worry about the GST portion. You need to go by your financial statement. Turnover means as per your financial statements. Whether GST, including GST you are showing as a turnover or excluding GST is showing as a turnover, it is option given to you. Any other questions? Yeah. So, yeah. Yes, sir.
For example, let's say Vishal Mart and all. So whenever I make the purchases, they credit certain points in my account. And let's say after 5,000 points or 10,000 points, I'm able to redeem that and purchase. So first question is, would that be considered as benefit? Again, the assumption that I'm using is, let's keep aside the threshold limit part for a moment. This is first example. The second part of it is, let's say other retail stores like these Reliance Smart and all, they don't give it on the basis of purchases, but they say 50,000th customer or 1 lakh customer or something. Randomly you get groceries or as gift. So can I attribute these type of benefits that I get to my previous purchases made and go by the same logic of that 1+1 offer and say that, you know, the cost is already recovered? Or is it an independent benefit, and are these bigger companies liable to deduct the TDS under 194R?
See, here, assuming there is a business connection is there because you have done the business with them.
Correct.
So to that extent, business connection is established.
Agreed.
Whether it is a benefit in first place without going to 194R,
Yes, it is.
then it is applicable.
But
Business connection is there and there is a benefit because there is no definition of benefit or perquisite in the act. See, we have seen the example of jamun mix where there is a direct connection. When I am purchasing jamun mix, I know that I am going to get this. That itself they are considering as a benefit. This is something which you don't even know that they are giving, or assuming you know, but remotely incidentally you will get it. That definitely a benefit.
What if it is some kind of a voucher which I know against which I can redeem it? I pretty sure know that the product against which I'm going to redeem it, but it's a voucher that I get.
Anything.
It
See,
would still
they
be
are
a
only
benefit.
telling discounts and rebates are benefits. But however, for removal of difficulties, you need not do TDS on 194R. Only discounts and rebates.
Okay.
They are telling even cashback. They are telling it is considered as a benefit. What is the difference between cashback and discount?
Correct.
You give 100 rupees and they will give 10 rupees back, or you only give 90 rupees after discount. The net outflow is remain same. But CBTT circular says discounts 194R is not applicable. Cash rebates 194R is applicable. Cash discount is different. Cash rebates. So since you achieved 100 turns of this thing, I am giving you 30,000 rupees. Turnover, they'll give money to your account. So that they are telling 194R is applicable. If they reduce from some other bill, then 194R is not applicable. So if I extend that analogy, so anything and everything it will come under 194R, except it should be fall under discounts or cash rebates. Cash discount, ultimately what you are going to pay to them is net of the discount to the customer. Hmm. Hmm.
Get adjusted to that credit note.
That's okay. So, but against some bills, right?
Yeah.
So, to that extent, the discounts are okay. If you give it as a cash, then cash vouchers, cash, everything, it will come under 194R. That's what sir was asking. So, credit card point, in my opinion, 194R is applicable, subject to threshold limit.
No, that's right. But what about the ultimate customer? Customer has to pay the income tax on that?
Definitely, 194R is applicable.
That's a huge.
No. See, whether you are going to pay or not is not a criteria for deducting 194R.
Yeah. But,
Ultimately, you have to claim exemption if it is required to be claimed as exemption.
no, but these banks do have the, PAN cards.
Hmm.
So definitely they use my PAN card and it comes in my 26As.
See, that and all is a practical difficulty in handling the assessments.
Yeah.
Now, whether 194R is assuming a charitable trust who runs one hospital along with one canteen. There, this kind of, bowels and other things used to come. So, whether, first of all, charitable trust is under section 11, it is not taxable.
Yeah.
So, but TDS they will deduct. How do you claim?
Yeah.
So, all these practical problems are there.
will come.
With
This will
respect
be
to how we have to handle, we have to see case to case basis. Whether 194R is applicable, yes, it is applicable. So that's why CBDT circular in the notification, first notification, in first they told you need not worry about other person taxability. Whether it will be taxed under 28(4) or not, you need not worry. What you have to worry, whether it is a benefit or perquisite, then deduct a tax at source. It is not your lookout. It is other person. Because as a deductor, I can't look at who are all the parties are there, what is their income, what is their status. I can't be able to know. So as far as 194R is concerned, you have to deduct. No, business, assuming I will put some hoarders outside. What benefit anybody got? So, virtually advertisement expenses are outside the purview of 194R, I can say. Yes, sir.
Does not include your cash payments. So, but you are saying cash payment is also covered. So, I'm not able to reconcile
Because that CBDT circular, it says that discounts or rebates are covered. If it is a cash vouchers or cash reimbursement.
Actually, yeah. By bank check payment or whatever.
Yeah. So, if you give it as cash incentives, the correct word used is cash incentives is not outside the purview of 194.
But that's plainly contrary to the Mahindra Mitra judgment.
100% I will agree with you, sir. But what I do is a CBDT circular, what it says, see, there is no difference between cash incentive or discount. It is one and the same. What in cash incentive, what you will do, you will collect 100 rupees and pay 10 rupees. In cash discount, what you will do, you net it off, only 90 rupees you collect it. But it says, CBDT says, that is different and this is different. Yeah. Here is the 194R, hosting parties or conferences. These are the things according to CBDT, it is not considered as 194R. New product launch, where all the dealers will be called. Samsung TV, one new TV they are launching. So all the dealers are called. So for that, if he is invited or given some dinner or buffet or cocktail, whatever, so it is not considered as a benefit or perquisite. Then obtaining order from dealers, they will call, they will ask, today I will give you one gold coin, commit. How much you are going to do the turnover in Dasra, Deepavali season. You need not even achieve. You commit, they will give. This kind of things, hosting this kind of parties or asking technique of sales, teaching the sales techniques or reconciling the accounts of the dealers, they will call. That is not considered as a benefit or perquisite for 194R. However, if you have taken the leisure trip outside, where one conference or dealer conference held in Singapore, where you will do all this activity, whatever we told. In that, what they say, dealer conference on Wednesday. Then you need to take 1 day before and after date is not considered as a perquisite or benefit. If 1 day conference ke liye, if you are taken for 7 days, then 4 days value of the trip is considered as a perquisite or benefit. So you should be very clear when you are going, what is the conference dates. 1 day before, 1 day afterwards is not considered as benefit. Otherwise, it will be considered as benefit. Next, you will be taken to Wonderla for one conference. Along with the conference, you will be entering into Wonderla. What they say, leisure portion of the whatever the trip is considered as benefit. If you have entered into Wonderla, whatever the benefit for entry ticket of Wonderla or Ramoji Film City, so it is considered as benefit or perquisite. Expensed income of family members. You are the dealer, you alone has to go. If you take your family, then family portion of expenses is considered as benefit or perquisite. Accordingly, 194R is applicable. For the purpose of overstay, see, here is the interesting proposition where if you achieve 1 crore rupees turnover, you will be given 1 car, assuming 1 Mercedes Benz car will be given. So it is in kind. So the moment you give it in the kind, there is no question of tax deducted at source. I can't say I will keep the chassis, you keep this one. So because everything is a car where there is no monetary amount is not involved, or monetary amount is not sufficient to cover my TDS, then as per the provisions of the section, what it says, you need to ensure the deductee pays the tax first before even giving this benefit to him. In the form of advance tax he has to pay. And you have to have declaration saying that this advance tax includes the benefit what I am giving, and that declaration you have to safely safeguard and give it to assessing officer when it is asked for. If any item or benefit given in the form of kind, you need to ensure that the other person deducted that, paid the tax at source or in the form of advance tax, and you have to take a declaration to that extent. This is number 1. But CBTT circular, to avoid the difficulties in doing all these things, what he told, you have 2 options. One is either you take a declaration plus advance tax challan, otherwise you only deduct and pay. If deduct and pay option is there, why there was a second option? How do I deduct a tax at source when I am giving at kind? Any item I am giving at kind. What I should gross for Mercedes Benz car. So now I can't claim it as expenses. That is one more argument altogether. So they are giving 2 options now. Either you deduct or you ensure that other person paid. But section is very clear. You have to ensure the only other person has to pay the tax. But CBTT circular casting a responsibility on you to deduct tax at source, which is not there in the section. See, here is what is the consequences. If you are not deducted tax, then 201 is applicable, 2011 is applicable, 1A is applicable. If I have not deducted, 271C penalty is applicable. Otherwise prosecution, or I need to go for compounding. But what is not there in the section, they are introducing in the form of CBTT circular. In HUL case, there is similar to what is the expression used with respect to lottery, where they are supposed to give 1 car to some person, where the similar expression is used. When anything, if you are giving in kind, you need to ensure that other person has to deduct a tax at source. Other person has to pay the tax. But they have not done. The TDS officers, the TDS officer raised the demand under section 2011 and 11A. Karnataka High Court, what they told, see, section 2011 very clearly says the person responsible to deduct the tax at source is not deducted or deducted but not remitted, then only 201 and 2011A is applicable. Here I am not the person who is responsible to deduct the tax at source. I am only ensure that other person has to pay the tax at source. Accordingly, 201, 2011A is not applicable. That is what the section what Karnataka High Court held in the case of Hindustan Unilever. So taking the analogy from that, assuming I am giving free gift, which is in kind. So what I should do? Only I need to ensure that other person has to deduct the, pay the advance tax. I have not done that. Taking this Supreme Court case law, and I say that 2011 is not applicable. Accordingly, 2011A is not applicable. The same way, 40A1A disallowance also, it will not come if I have given some anything in the form of kind where I have not deducted tax at source. Accordingly, 206C, 271C penalty is also not applicable. See, CBDT, according to me, the circular is ultra virus because the section says you need to only ensure, but they are casting a more responsibility which is not there in the section. So any comments on this, sir? Any questions on this? So in my opinion, if any benefit is given in kind, if you are not deducted tax at source, according to me, 201, 201A, 40A1A is not applicable. However, don't give as a consultancy at this level if it has to be only in the form of litigation point. If it is not deducted somebody, you can take a shelter under this. Because the moment if I say, if any benefit which are required to be given where 201(1)A is not applicable, the whole provision itself, it is defeated. The purpose of 194R itself, it will get defeated. You need to take a shelter as an exception. When assessee is not done, there is an issue, then you can take this shelter. Otherwise, it is better to deduct the tax at source. So any questions on 194R?
So in that case, the wholesaler pretty much is not at all enjoying the benefit of that bowl that he's getting because it is being shifted to the end customer. So when they deduct TDS on that, it's pretty much like, it will become the income of that wholesaler.
See, now you look at from the MTR point of view, because I am a deductor. Whether I need to look at who are all enjoying this product or not.
No, but
is it see, I am looking from 194R compliance point of view. And very clearly CBDT circular told whether that person is, that in the hands of is in his hands, whether it will come under 28(4), whether he is enjoying or not, it is immaterial.
Yeah, but
whether it is a benefit or perquisite.
Yeah, but looking at this wholesaler point of view, it's like, I'll have to show something as income where I'm actually not, getting any benefit
100% I'll agree with you. Yeah, there is an issue. But the section says, the CBDT circular says, unfortunately. Because if you see, as a jamun mix example, it is 10 rupees, is less than 20,000 rupees. Assuming, for the sake of argument, all 365 days, I will cook jamun in my home, bringing one jamun. Even then, it will not cross 20,000 rupees. So in any case, in jamun mix example, there should not be 194 at all, because the person who is not going to buy 20,000 rupees worth of jamun, ultimate customer. But they have not happily worded like that. First of all, it is a benefit in the first place. According to me, no, because jamun price is already over inflated by that jamun this thing. Correct. Normally, what is the FMCG, what I understand, assuming today is 50 rupees, they will increase to 60 rupees and they will give this gift. After 3 months, they'll remove this gift and price remains 60 rupees. And they'll increase to 70 and give some gift. After 3 months, they'll remove. So that is how the pricing increase will happen. So virtually the price of the bowl is already considered in my main product itself. There is nothing called free in the business.
And
So that is the major concern.
one more point,
Yeah.
sir. With respect to this travel and all of that, like usually these insurance agent, they'll be sent abroad and all for meeting that particular whatever. So that way, if you say, they were sent to a trip which costed 5 lakh. So for the business, from the business perspective, 5 lakh will be the value of perquisite. Now, if I deduct TDS on this 5 lakh at 10%, then again at 50,000 will be an additional cost on the company only, right? So
Deduct the tax at source. You need to collect from them and deduct. So if it is a leisure trip, that's what we are asking about. If it is anything, it is in kind. Or if you are giving monetary as well as non-monetary item, if it is not sufficient, you need to ensure that other person pay the advance tax and then release the gift. Before taking to abroad, you need to ensure that this is the value, pay advance tax, give the challan, then we will take it to abroad. That is how we have to interpret.
Additional compliance burden pretty much.
No, it is more than additional compliance burden. See, the kind of complexity is involved. If any dealer says, though, you have to pay 50,000 rupees or give a declaration or pay income tax, means nobody will come.
Sir,
Okay.
Sir, in the example you said,
Yeah, I will come to that. Anyhow, interest rebate by the bankers. Normally, CBDT circular told. So I used to come to that. So one-time settlement, what they say, first of all, when you go for one-time settlement, the borrower is not at all paying. Then only you will go for one-time settlement. Over and above, if you deduct TDS, where is it? He will not pay because he is already bankrupt. Okay. For that purpose, they have given an exemption. But however, it is only for one-time settlement. If it is a restructuring or anything, or if any waiver off in the form of restructuring, according to me, 194R will come. The specific mention of something in the form of one-time settlement, that means exclusion of all the other things. Any other interest waiver, partial interest waiver or restructuring, it will come under 194R.
Prepayer, I give 1% rebate. In that case, will it be
Is it a
covered
benefit
under
or not? Is it a
194?
benefit or not?
It is a benefit.
Is in the course of business?
Yes, it is in the course of business.
It will come unless there is a CBDT. CBDT excluded only one thing with respect to one-time settlement. Other thing it will come. If it is more than 20,000 rupees, you have to calculate and deduct 194R. Okay. So now free samples given to the corporate hospitals where these doctors are employees of the hospital. What CBDT told, virtually though even given to doctors, ultimately they have to give it to hospital. So it is nothing but you are giving a benefit to the hospital. Accordingly, you need to deduct tax at source, not on the doctor, on the hospital. If the doctor is a employee, so when you go and give the gift, you should ask whether you are a consultant or employee. Then give a PAN number of yours or your hospital. If the doctor is a consultant, then what you have to do? You have to do on hospital. Hospital in turn has to do on doctors. To remove all of this difficulty, what they have done, this pharmaceutical company directly can do TDS on doctors. So if it is a doctor is a consultant, doctor, if he is an employee, then on hospital. This is the clarification is given. Here is very interesting proposition. Social media influencers. If you give any product to social media influencers and that product, if they retain it, then it is considered as 194R benefit. What are the social media influencers? We can say Shah Rukh Khan given some Byju's product, let him use first, understand, then promote. So to the kid. So if he keeps himself, then it is 194R is applicable. If he give it back, then it is 194R is not applicable. You can think of many examples, like Ajay Devgan, he'll give Ilaichi products, advertisement of Ilaichi product. And, Akshay Kumar, Ayush toothpaste, he has to keep it himself, then it is 194R is applicable, otherwise 194R is not applicable. There are many other examples where you can see the social media influencer. Take for example, any car launch. Before car launches, there will be YouTube video with respect to the review of the car. What is the mileage? If Tata Sierra, this car, that car. Because they have given that car just to see and give the review in the website. So that car normally they will not keep it on themselves. They will give it back. If they give it back, then it is not considered as a benefit or perquisite. If they keep it themselves, then it is considered as 194R is applicable. Here is one more interesting 194R point. Assuming you have taken 7-day tour to Singapore, you are not able to identify when I conducted a seminar, conference and other things. However, you know that 3 days conference is happened, 4 days leisure. So to get into all this 194R problem, I will systematically divide my expenses. Okay, 10 lakh rupees I spent for 10 days, 4 days, 4 lakh rupees. I will disallow in my statement of total income. I will not claim as a deduction in 194R. Not 194R, I have not claimed as a expenses. Then CBDT circular says, then you need not comply with 194R. If you disallow the expenses, then 194R is not applicable. Accordingly, you will not be treated as assessee in default. So take a clue from this. Assuming any expenses I have disallowed, that means I need not deduct a TDS. Because what is their logic is, there is no revenue leakage because I am not claiming expenses. It does not matter other person is showing as an income or not. There is no revenue leakage. If this being the position of law, so they are connecting revenue leakage versus my TDS obligations. How it is even thinkable? Assuming, in my example, I am computing income from house property. I have incurred some building repairs. I have given some contract. 194C is applicable. I am not claiming under income from business because 30% deduction I am claiming. For 24, I will not get any other deduction, only 30% deduction. So I need not deduct TDS. So 40A1A does not applicable. But 201, 201A it will come. But here CBDT grossly, according to me, erred in giving that kind of exemption. If you disallow the expenses, then 194R is not applicable. No, that is different thing. Anyhow, you disallowable. See, first of all, now the doctor who takes the gift, which is not allowable under as per that pharmaceutical or their regulatory authority, which is against to law. So 37 deduction they are not allowable. That's what Supreme Court told. Okay, you give it to anything doctor, that will be disallowable anyway. If that being the case, why I should deduct TDS? Loan waiver we have completed. Here is the case where I given a car as a gift. Whether I can claim as a depreciation in the hands of the deductee. Because I got this as a car as a gift or benefit. Whether can I, because I am using this car for my business purpose, can I claim it as a depreciation? CBDT circular says yes, no problem, you can claim. So, any questions on 194R? Because this is going to be a burning topic. We will be dealing with day in and day out. And CBDT clarified bonus shares and right shares not required to deduct 194R because there is no increasing value of any net worth of the shareholders. 194S, virtual digital asset. See, this is no much practical implication for many of us. So the only thing is, the deductor is a person we need to look at from the deductor point of view or buyer's point of view. If the buyer is a specified person, then 50,000 is the threshold limit. If it otherwise, it is 10,000. Otherwise, it is not a much amount. It is only 1%. Here is the person where if he is a specified person, the consideration payable by a specified person, then 50,000 is the limit. Other person is 10,000. For the purpose of turnover, 1 crore or 50 lakhs, the same way. Here is the transaction. I purchase VDA. Once again, I will not go into the definition of what is VDA, virtual digital currency, whether you call it as a Bitcoin, altcoin, or FTQ, whatever. So, all these things are virtual digital currency. Who has to deduct a tax at source? The buyer, assuming he is a specified person, consideration what he pays to seller, and in this case, the buyer has to deduct the tax at source. No problem with respect to this. But normally transaction with this Bitcoin or any virtual digital currency conducted through stock exchange. What it will happen, I will pay to stock exchange, I will buy. And stock exchange in turn, they will pay to somebody else, they will buy and they will give it to me. If I go strict interpretation of 194S, if I am buying, then I need to deduct a tax at source. So then for the same transaction, there will be two 194S. In these circumstances, CBDT clarified saying that buyer you need not do anything or seller you need not do anything. Everything has to done by stock exchange. The transaction between buyer and the exchange is exempted. Only exchanger to seller, there you need a tax at source. So virtually all the stock exchange they do, like WazirX, they will deduct a tax at source at the rate of 1%. If the Bitcoin is exchanged with other Bitcoin or altcoin or FT, whatever, if that is the case, I need to ensure that other person pay the tax, take a declaration, take a advance tax challan before releasing my portion of tokens, we can say. So that means if the two people are exchanging the tokens, then both the people has to ensure that other person has paid the advance tax if it is exchange happens. If the stock exchange, in the stock exchange happens, if it is a stock exchange happens, then the exchange has to deduct tax at source from both the people and respective portion of the tokens it has to be given. Assuming both the people, one person is selling 100 Bitcoins, another person is giving some other coins, where the 1% of both Bitcoins or altcoins has to be deducted. They have to deduct not the value, they have to deduct the Bitcoin itself. Out of 100, the exchange will give 99 to them and keep it as 1%. And that 1% of altcoin, whatever it is they have retained, that they have to sell it in the market and send the mail to the buyer and seller. This is the value of TDS. Very complicated, but it is not required to be worried about any of us because everything it will be done by stock exchange. If it is only for this transaction, you need not apply for TAN. So there is a form called 26QE. See, this is nothing but 26QB, how we do the transaction with immobile property. The same way we can complete this transaction. See this section, whether virtual digital currency versus e-commerce operator 194O, because e-commerce operator also where there is one platform, they are facilitating buying and selling. Here also there is a platform which facilitating buying and selling of this currencies or tokens. CBDT circular, what it says, they are not come to any conclusion saying that these tokens is a goods or services. They told irrespective, will not go into the debate at all. When there is a virtual digital currency, then 194O is not applicable, 194 yes applicable. Here is the 194P, specified senior citizen. I think somebody has to tell me anybody has applied this section anytime, because what it says, he is a resident of India who is aged about 75 years and he has only two incomes. One is pension and interest income. And he should have only one bank account or one company bank account like ICICI. You can have multiple bank accounts in ICICI, but you should have only in ICICI or SBI, any one bank. If you have two bank accounts, then this section is not applicable. Then you have to give a declaration to the bank. See, this is what is my income, this is what is my ATC, 87A benefit. All these things you compute, you deduct the tax at source as per the provisions of the Act, then the senior citizen is not required to file the return of income. The only benefit the person who is getting is only not required to file the return of income. But TDS is already over as per the provisions of the Act. Anybody has applied this provision anytime? Only interest income and pension income. Even 1 rupee dividend income is there, then it is gone. No, they have to. They are bound to, but you should fall under this category. I don't think anybody only have pension income and interest income. Might be, but there are many other conditions. You should be more than 75 years of age and you should have only bank account. You should not have multiple bank account. That and all, it is very difficult. Yes, sir. See, anything will be there. See, from cooperative bank, 500 rupees dividend will be there. Whether it is exempted or not is secondary. They are telling only two incomes. So it is only according to me. So I have not heard of anybody is taking advantages of this section. This 194Q, this is once again, it is an hot topic. So purchase of goods, buyer has to deduct a tax at source if his turnover is exceeding 10 crore rupees in the preceding year, not in the current year, in the preceding year. Then the deductee is the seller and threshold limit is 50 lakhs. Up to 50 lakhs you need not do anything. If it is more than 50 lakhs, you need to deduct tax at source. Here is the question. See, I need to look at the turnover of the previous year. Now I have incorporated the company on 1st April 2022. My turnover as on today is 50 crores. Whether I need to deduct 194Q or not, I am a buyer. CBDT circular says you need not do, because this is, we need to see previous year turnover, current year turnover does not matter. So you will get exemption of 1 year if you are a newly incorporated person. 194Q is not applicable in the following: TDS deductible under any other cases. Like we have seen, virtual digital asset, where if you are deducting under that section, you need not come under this section. Or there is a e-commerce operator. If you are going under e-commerce operator, then you need not do under 194Q. Then if you are doing under TCS collectible under section 2061H, then you need not deduct under this section. Yes, sir. 10 crore rupees turnover. According to me, 95%, 99% of the people will go out of the ambit of this provision. Is a buyer responsibility, not sellers. Here is the buyer. I will come to that seller later. 206C1H, it is there. I will come to that. And I will come to that interplay also. Where the provision of payment or credit, whichever is earlier. Once again, even on advances also, you need to deduct. Even though it is for purchase of goods, if somebody has given on 60 lakh rupees advance, on that also you need to deduct. Because you need to the differentiation between TCS and TDS. Here credit or payment, whichever is earlier, the moment I take advance, according to me, it should not come, because the basic charge is on purchase. It is not on receipt. Unless there is a purchase happens, on advance you should not deduct. However, CBDT circular says, says you have to deduct a tax at source. Assuming if seller don't have a PAN number, what will happen? Then you have to deduct at the rate of 5%, not 0.1% to 5% you need to deduct a tax at source. if the person who is having the turnover of 10 crores and purchasing 50 lakhs and more in the year, and other person having the no PAN, that kind of situation I can't even imagine, where the person you have purchased more than 50 lakh rupees and you don't have a PAN number. But I will come to some situation, it will be there. Let us see that. So here is the 206 AB, non-filers. Assuming provisions of specified person, if it is comes under specified non-filer, 206 AA where 5%. If it is a 206 AB also maximum is 5%. Accordingly, TDS has to be deducted at 5%. For the purpose of this section, GST to be included or not? For the CBDT clarified, in the invoice if you show GST as separately, then you need not do. If you are not showing, you are a composition dealer. For that purpose, you need to do on the whole value. If you have shown separately, then not required to deduct tax at source. If the money is refunded by the seller, I have given advance and he has refunded. What I have to do? Because I already deducted. Then apply 206(1)(h). Let him collect the TCS. So that I have deducted, let him collect the TCS. So here what they say, you need to adjust this amount, whatever you have given, against next purchase. Forget about whatever is happened. But whatever, if you have refunded anything, you adjust against next purchase. If the returned goods are replaced, you have given some goods back and they are replaced with that goods, whether 194Q is applicable. CBDT says because you already deducted tax, it is only replacement of earlier goods, so 194Q is not applicable. So here is the case, I have sold goods for 65 lakhs, in June I have returned 10 lakh rupees, purchase returns, then July there is a 25 lakh rupees sales, purchase. On first transaction it is very clear, I need to deduct tax at source at 0.1%, at 65 lakh rupees ke liye 6,500. Purchase returns 10,000, you need not do anything because what has happened is happened, you need to adjust against further invoices. I have purchased one more item in some subsequently for 25 lakhs where I need to adjust this 10 lakh rupees, only on 15 lakh rupees I need to do the TDS under section 194Q. If the non-resident buyer, whether provisions of 194Q is applicable. Here it says, if the effectively connected with the PE in India, if the non-resident has a PE in India, then 194Q is applicable. If you don't have a PE in India, is not applicable. Look at the definition of permanent establishment. Permanent establishment, they are not referring to Article 7 of any of the PEs or any DTAs. Permanent establishment means include fixed place of business through which business of the enterprise wholly or partly carried on India. If he has any business place in India, then it is considered as a PE in India. Accordingly, 194Q is applicable, though it is non-resident. Whether I am a buyer, I am purchasing from agriculturist whose income is exempt under section 10. I am saying it is agriculture income. Suppose Arakanat. So we normally say that Arakanat merchants are, so in the north we can say that wheat agriculturists, they are much richer than any business people. So if I take that example, if you purchase 1 crore worth of Arakanat from the agriculturist, whether 194Q is applicable. Or I have purchased some goods from the charitable trust, 194Q is applicable. Is applicable? So in first example, agriculture income, if I purchase from the agriculturist more than 50 lakhs and my turnover is more than 10 crores, whether it is applicable? Why? CBTT says, if the income exempt as a person, then you need not deduct tax at source. By source, if it is any income is deductible, then it is not, you have to deduct a tax at source. I will explain once again. I am I have come under RBI Act, Reserve Bank of Act or ADR Act, where RBI need not file the income tax return. They are completely exempt from income tax. If you purchase or if you sell anything, for them 194Q is exempted. If the income per se, definition of income, if it is covers under agriculture income, even though it is income, it is exempted in the hands of the seller, then you have to deduct. You need not see the source of income. You need to see the person who is completely exemption under section 10, any other section under section 10. If the exemption is for source, then you have to deduct. If the exemption is for the person, then you need not deduct. 2061H, 194Q is one and the same. The only difference is 194C1H is not applicable if it is for already covered in some other sections like motor vehicles or alcohol, liquor, all these things is already covered in some other section, hence that given as exemption. Here is the one classic case where motor vehicle cost 10 lakh rupees. See, I am a dealer of cars. I am a dealer of cars. I am selling the cars where this section is applicable. What about the buyer? Means manufacturer who sells me a car where I am a buyer, where I am not a specified person under section 194Q, where my turnover is not exceeded 10 crore rupees there, but I need to come under here. What CBDT told with respect to 194.6C1H, it is applicable. If it is not applicable, any other section. So what I need to look at it for the purpose of interplay, I will come to this. Here is the chart. The turnover of the buyer and seller less than 10 lakh rupees, then forget about 194Q and 194C1H. Both are not applicable. If the turnover of both the people it is less than 10 crore rupees, it is not applicable. If turnover of the buyer and seller is exceeding 10 crore rupees, then I need to see both the people separately. I will see buyer 10 crore rupees, then deduct 194Q. If the buyer's turnover is exceeding 10 crore rupees, you need to look at 194Q. If the seller turnover exceeding 10 crore rupees, then I need to see whether buyer turnover also exceeding 10 crore rupees. If the buyer turnover is excluding 10 crore rupees, then I need to apply 194Q. If the buyer turnover is less than 10 crore rupees, seller turnover is exceeding 10 crore rupees, 2061C, 1H is applicable. So this can be better understand in the following cases. Case number 1, the buyer in the previous year 4 crores and 5 crores is not applicable. Case number 2, buyer turnover is exceeding 10 crore rupees and seller turnover is less than 10 crore rupees, then 194Q is applicable, 2061H is not applicable. In third example, buyer turnover is less than 10 crore, seller turnover is more than 10 crores, then 2061H is applicable. Because I need to look at whose turnover is more. Assuming both the people cross the 10 crore rupees, then I need to apply 194Q, not 2061H. So the buyer has to deduct a tax at source, not seller. Anyone. So you can't do both the people can't do, because the same transaction both the people cannot do. That's why they given very clear instructions. 194Q is applicable, 2061H is not applicable. Here is the case of 206AB, new introduction, very interesting. If the person has not filed the return of income, then the tax has to be deducted at higher of the following. The specified person is the person who has not filed the return of income for both the years, and the due date for filing the return of income under section 139(1) is already expired. Then it is considered as specified person, accordingly, and aggregate amount of TDS what you are going to pay is more than 50,000 or more in last 2 previous year. Any person who has not filed the return preceding the previous year, then it will come under this purview. So what we have to look at it illustration, see, for the assessment year 23-24, I am doing a TDS on 1st April 2022. I need to look at 2 assessment year where 139.1 due date is not over. 139.1 on 1st April 2022, assessment year 22-23 is not over because the due date is July, September, November, depending on the person. If it is an individual, it is a July, then otherwise you have to see September, November if it is a transfer pricing case. Then I need to look at 2 years before this date, whether the person has filed the return of income, because the expiry due date for 139.1 is already expired on 1st April 2022. Assuming I am deducting TDS on 1st January 2023, then I need to check only last 2 years, that means 22-23 and 21-22, because but both the years 194, the due date for filing the return is already over. So if I am not doing this, if TDS has to be deducted at twice the rate of the tax normally you should have deducted. If it is a 2%, that becomes 4%. Or if it is a 10%, it becomes 20%. Or 5%, whichever is higher. Twice the rate of tax or tax in force or 5%, whichever is higher. Here is the case, if the 206 CA, if the other person don't have a PAN, then you to deduct at the rate of 20%. If the person don't have a PAN, where is the question of filing the return? So that definitely will not arise. So if the person don't have a PAN, then it will come under 20% category. Here is the example. If it is 194C, normally how much you will deduct? 2%, 10%. Twice the rate will be 4%, 20%. Twice the rate in force, the same thing, 4%, 20%. And 5% is the maximum. Highest of this, we need to deduct tax at source. For 194C, I need to do at 5%. 194J, I need to do at the rate of 20%. So what we have to do? We need to see what is the due date of other person. 139.1 due date is over or not. Because 139 due date is not same for everybody. If an individual, different. Having a tax audit, different. Having a corporate, different. Having a transfer pricing, different due dates. So I need to ensure that what is the due date. Accordingly, I need to see whether current year or 2 years preceding to that. And accordingly, apply these rates and deduct the tax at source. This section is not applicable, cash withdrawals and other things. So anyways, this all, if I see all these items, it is all more of one-time payments or it is already covered in some other provisions. So these are the exclusions with respect to 206 AB. However, whatever I told, you forget everything. 206 AB compliance is very, very easy. Easy or not? Very easy. So department has opened one portal. You have to put anybody's PAN number. You will come to know whether it is a specified person or not specified person. Accordingly deduct 5% or 2% or whatever the rate. Here is the portal where it is a Insignia portal. Go and log into this portal and put your PAN and password. Create one password if you don't have. Then form type. Where compliance portal, type you select. Go there and compliance check with respect to 206 AB and 206 CCA and click on that and then it will ask PAN number. PAN number if you press, then it will come whether this person is specified person or not specified person. If he is a specified person, deduct more. If it is not a specified person, deduct less. See, here is the one advantage. You can do bulk PAN. All up to 10,000 you can check one chart. Up to 10,000 PANs you can check in one chart. While doing the tax audit, you need to check whether TDS has been deducted in correct rate or not. So what you have to do, you need to take the traces list or whatever whatever the Winman software or Saral software, take a data from them and run through this, you will come to know whether they are deducted at correct rate or not correct rate. What I understand from some of the people, in Winman itself, it has an option. While filing the return itself, you can run this, automatically it will check everything and shows whether it is a specified person or not specified person. You need not worry about any of this complaints, whether that file is filed or not. According to me, the portal will be updated once in a year. That means on 1st April they will update. So subsequent development, whether they are filed, not filed, it will not consider anything. So the person is not filed, then he has to suffer at higher rate only. If, according to me, out of 2 years, if he has filed only 1 year also, he is not a specified person. But portal, what I have checked, it shows even the person is not filed 1 year also, it's showing a specified person and TDS is deducted at higher rate. So forget about 206 AB, whatever it says, the best solution is go and check all the PANs in one shot under Insignia portal and deduct a tax at source. See, as a deductor, what I will get advantage by doing any tax planning in TDS? I am just collecting and paying. If it is a specified person, so be it. What is my problem? Deduct and pay. But if I am not paid, then there is a consequences. 206111A, penalty, all these things. So it is better you run this, all your database and come to know who are not filed. So then you have to think whether you have to do the business with them or not. Now, if anybody observed, last 1 month, all the assessments, what they have given the consultation notices, they are telling other person not filed the return of income. Why I should treat this as income as a genuine expenditure or not? If you have given some expenses or you have given some income to other person, if he has not filed the return of income, they are telling, questioning the genuinity of expenses itself. If other person is not filed, you have more to answer. The same thing is applicable to 206 CCA, where tax collected at source, same rate, twice the rates or 5%. I will not deal much on this. 194N, this is cash withdrawal. Once again, if the person is specified person where he has not filed the return for last 3 years, then up to 20 lakh rupees exempted. 20 lakhs to 1 crore rupees, you need to deduct tax at source of 2%. More than 1 crore rupees, you need to deduct tax at source at the rate of 5%. If he has filed the return of income, then only 2% exceeding 1 crore rupees, you have to deduct tax at source. How do I know this fellow has filed the return in last 3 years or not? So once again, they given an alternative solution where go to income tax portal, click on TDS on cash withdrawal, put a mobile number, PAN number, go, and it shows TDS should be deducted at 2% of cash withdrawal more than 20 lakh rupees and 5% on withdrawal more than exceeding, since the taxpayer not complied with the requirement of 194N. So a portal will show very clearly whether the person has filed or not. So we need not have any much compliance issue, but we have to ensure that we run this query. Here is the person where he has filed the return, so where that's why it shows only 2% you deduct more than 1 crore rupees. So this section is applicable only to, not applicable, this is only banks, cooperative bank, post office. If any of your clients are banks or cooperative banks, you need to advise them to deduct tax at source by running this query. So 2% or 5%, or if you are doing any tax audit, then you need to run this query to check whether it has been deducted or not deducted. Fees for professional services, very simple. Now the only difference is for technical services they made it reduced to 2%, where royalty for cinematographic distribution, it was, there are some case laws where they used to say it is not a professional services or 194C. That's why to plug that loophole, they made it 2% TDS on distribution services of cinematographic films. Here is the one good thing, what any consideration, what do you mean by technical service? Any consideration for rendering any managerial, technical or consultancy. Note the word or. Technical or consultancy services is considered as a technical services. Come to what is professional services. Legal, medical, engineering, architectural profession of accountancy, technical consultancy. If you give technical consultancy, then is a professional service, or technical or consultancy, then it is considered as a technical service. If I as a chartered accountant, whether we are giving a technical consultancy or professional consultancy. Audit, whether it is a professional work or technical work. Professional work, accounting. Okay. So, giving opinions. No, here also I'll say consultancy work, technical. Technical means what? Any technique are involved. Here they say technical or consultancy, it will come under technical service. Technical consultancy will come under professional service. So, it is only a matter of debate. So, as a chartered accountant, we are not bothered whatever, if they give the fees, we should be happy. So, whether they deduct under 194J1 or 2% or 10%, whatever the rate you want to deduct, you give remaining and upload so that we can get a TDS credit. So, 194O, e-commerce operator, once again, e-commerce operator, everything they do, we need not worry about it. Only thing is, they will deduct a tax at source of 1%. If you are not giving a PAN, 5%, according to me, no e-commerce operator will board without PAN. So definitely they will ask for PAN. So this 5% criteria is not applicable. If it is a e-commerce operator is deduct a tax at source, any other section is not applicable. Assuming Swiggy or Zomato, where the person who is purchasing and selling the goods through Swiggy or Zomato, the turnover exceeding 5 lakh rupees, the 194Q is not applicable, where any sales is made more than 50 lakh rupees or your turnover exceeding 10 crore rupees, 194Q is not applicable, where it is covered under e-commerce operator. That is the only difference we can come to know compare to 194Q and this e-commerce operator. See, these are the new circulars which has been come. So which we already dealt in the respective sections. So there is nothing to say anything more. These are the new circulars it has come. See now, whatever the new introduction of sections what they have introduced in 194S, 194PQR, they have inserted 2 sections. In case of difficulty, CBDT will clarify. That is part of sections itself. And that will be tabled before the parliament and acceptance will be taken. So that is how they are worded. So virtually they are giving kind of CBDT circular is equivalent to section. They are trying to make it as a, because they are drawing the power from these sections and accordingly giving any clarification. According to me, that will never match the section. So CBDT circular is circular, so section is a section. So but they have included all the section, all new sections, these 2 things. For removal of the difficulties, CBDT can issue the circular. That circular will be placed before the parliament and consent will be taken. So these are the views with respect to one new amendments or what we call tedious or very tedious job as a chartered accountant. TDS becomes very tedious nowadays. So earlier, if somebody asked me, what is the rate of TDS? 194C, 2%. No, not like that. 194C, okay, whether the other person has filed the return or not. How many years? Now I am to look at it, 1st April. So I need to look at 2 years before or 3 years before. Whether he has a PAN, whether he don't have a PAN, and whether he has excluded the turnover, whether this section is covered in any other section where I need to exclude this. So it is not easy anymore to give advice on any TDS provisions. Earlier it was very clear, 194C, 194H, 194J, 194I. Only 4 provisions. So now, earlier, these TDS provisions, whenever it is applied, there was kind of semblance of income was there. Like if you are giving to contractor, if you are giving to professionals. Now see, if you withdraw the cash, TDS is applicable. In what way income transaction is involved? So there is no, so the ambit seems to be, they made it very clear that it is not restricted to only the income and expenditure transaction. Any transaction of financial importance that has been enlarged. So with this my view, so if any questions are there, I am happy to take on whatever the 1.5 hours we discussed on any of the sections which I am happy to answer. Then first of all you will be devoured because accounting and audit we can't do. So assuming, see now we need to see whether it is a technical service. Technical ke liye 3 things: managerial service, technical or consultancy. According to me, writing book is not a consultancy or managerial. Whether it is a technical, whether it will fit into the definition of technical, I say no. So according to me, the profession means the person who is doing a chartered accountant work. Any chartered accountant work has to come under professional, according to me. Because accounting work can be done by a chartered accountant as well as a TAP, tax practitioner. According to me, tax practitioner ke liye there is no other section. 194J according to me is not applicable. A professional means the profession as mentioned in section 44A, where they say that a profession means architect, accountant, all these things. So, however, it doesn't matter. According to me, 10% is applicable. It is a professional service, if any chartered accountant. Yes. See, here is the case where advocates, they give a legal opinion. I will also give a legal opinion. For him, it is a technical, how it has become a professional service. Because there are 2 different people giving the same service. For him, it is a 2%. For me, it is a 10%.
There also it is
so,
10%
but
only.
so all these things is a practical, theoretical debates we can have, keep on having. According to me, any chartered accountant service comes under professional service. Yes, sir. So that is ultimately, sir, intent. According to me, intent is very good. If you ask me 194R, how much leakage? How much, sir, according to me, cement manufacturing companies, what they are selling 400 rupees worth of cement per bag, their cost of production is not more than 100 rupees. Another 100 rupees for marketing, another 100 rupees for transportation. That is the costing it will happen. So this 100 rupees they are claiming as expenditure, other person is not showing as a income. Okay, that is the reason why it has been brought. Even you see pharmaceutical company, how much they give for doctors? We know everybody. But other person is not offering. See, the intent we can't question. According to me, it is welcome move. But however, this pharma, free samples, these kind of things, according to me, they should take a lenient view. Because the person who is definitely, the doctor is not consuming that medicines at all. It is not a benefit in the first place. The whole purpose of 494R is defeated by including all these, dimensions. But the intent is very good. According to me, gold coins or whatever the benefits, what they get it is enormous.
Sir.
Yes.
For section 194Q,
Yes, sir.
Suppose my previous year turnover is more than 10 crore, but current year turnover is 8 crore. For subsequent year, next year, that 194Q will be applicable or not?
I need to see previous year. I need not see previous to previous year.
Okay.
What is my previous year?
Okay. And 194Q overrides 206C?
206?
C. Or vice versa. Which section override?
194Q overrides. If both the people turnover exceed 10 crore rupees, then 206C 1H will 194Q you need to apply. So that's what the circle, what I have shown here with respect to 194. Here is the table. See, 194Q and 206C 1H, where both the people turnover exceed 10 crore rupees, 206C 1H is applicable as well as 194Q is applicable. In that case, 194Q is you need to
Suppose
apply.
if I don't deduct TDS, then I'll be considered as assessed in default?
Yes.
Thank you, sir.
Sir, and an individual
Yes.
for whom the TDS is deducted under section 194N, can he claim the TDS credit while filing his return of income? Like for the cash withdrawals, what he has, the TDS has been deducted. So at the time of filing his return, whatever the TDS is deducted, can he adjust?
You have
his
to
tax?
claim, but you
Yes.
have to declare in the that means you account that cash withdrawal and claim it.
I can take that credit.
Yes.
And second thing, sir, that for 194Q, the threshold of that 50 lakhs rupees that we say, right? So every year we have to see this 50 lakhs.
Yes.
So let's say in a year one, though my turnover has exceeded whatever the 10 crores is there, so 50 lakhs threshold every year I have to see. And
See, 10 crore rupees limit you have to see last year's. 50 lakh rupees I need to see in the current year.
correct. So second year, since last year was applicable, the second year also I have to again, let's say my purchase is 60 lakhs. So I have to reduce 50 lakhs and then only 10 lakhs I have to deduct it, right?
Yes, I need
Yeah.
to deduct only on 10 lakh.
10 lakhs, okay.
Deducted if it is deducted by any other section. What does it mean?
Sir, means e-commerce operator. I'm just giving an example of e-commerce operator where Swiggy or Zomato, where they are already deducting tax at source under e-commerce operator 194O. If the TDS is already deducted there, 194Q is not applicable. Because e-commerce operator we are already deducting. For the same transaction, you can't have two different TDS.
So it means on the same transaction, not in any other section, 194C or one, not like it is not connected to that.
No, 194Q is purchase of goods or services.
In that
Assuming I am providing a chartered accountancy services, I have raised 1 crore rupees bill. 194J is already applicable. So 194Q is not applicable. So because 194Q is 0.1%. So other sections is much more than that. So virtually they want to safeguard that. So because I will come under this, so that accordingly I will not go under 194J. People will start argue on that. So that's why as a precaution, they made it 194Q is not applicable when other sections are applicable. When there is a specific section on TDS.
When
there is nothing so specific, like purchase of goods, there was no section. That's why they brought in 194Q.
Sir, in the slide, in the last column, in both the cases, 10 crores has been crossed.
Yes.
Buyer also deduct TDS and the suppose TCS also deducted by the seller.
See, you need
How do I know that you won't do?
Take a declaration. See, you know your turnover.
Correct.
Okay. You know how much is the purchase or sales you have made. So then the only question you have to answer, what is whether the other person is deducting or not. Only it has to be bothered by buyer. In the first place, buyer has to bother because the buyer in the first premises is 194Q is applicable. The moment you buy something and your turnover in the previous year already exceeded 10 crore rupees, then you need to look at it. Assuming your turnover is not 10 crore rupees, you need not worry, other person will look out it. It is our other person's lookout. When you are selling also, you need to look at your turnover.
No, my point is, both the person, how do I know that you will not do?
You need to ensure, because you are a purchaser and seller, you have a relationship. So whether you are doing under 194Q, then ask him not to do under 20C 1H. Because I am deducting, don't deduct, karke, you have to instruct him.
Okay.
Because you are a buyer has to instruct the other person. Seller के लिए 2061C 1H.
If seller charges under section 206, see then 194 is not Q.
No, it is not like that. So even if he charges, he is not supposed to charge. It is your primary duty to charge under 194Q.
But if he charges under 194Q, then I need not charge under.
No, 206 you don't do it. See, both the sections are applicable. 194Q prevails. If 194Q is not applicable, then go to 2061H. Sir, you will come to know TDS. You will debit to your account whatever the TDS or whatever the invoice you mention.
No, to get over this penalty provision, I straight away go for 2061H. Is there any problem?
No problem. No problem. Sir,
that's it.
You, as a golden rule, don't make any planning in TDS because we are not going to achieve anything. And this 0.1% for 10 lakh ke liye how much? even 100 rupees, 1000 rupees. According to me, I have seen in my clients over liability in the current year, it is not even 1 lakh rupees.
Even
For
government
100
has no
crore
issues
rupees,
because
it is not even 1 lakh rupees. If you, as a matter of precaution, what we have to do, all buyer and seller list of exceeding more than 50 lakhs. Make one list, ask them to deduct for buying as well as selling.
That's
Finish.
good.
So because according to me, so if you do, according to me, 100 crore turnover worth of party, 10 people, you will get it. So that if you do it, so then you will not be having any problem.
Government also is happy.
No, 0.1%, it is not a revenue, collecting measure, sir. According to me, that 50 lakh rupees threshold is too much. The 50 lakh rupees turnover, how can you do without GST? How can the goods move from one place to another place? When GST turnover, you can always capture. I don't know why TDS provision is required. 0.01%, sir, there also.
1%. Both
206C 1H 0.1%. Same one. Any other questions, sir? At the outset, this is the time I take an opportunity. I want to thank Bangalore branch of SIRC of ICI, especially Srinivas sir and his team, who is always encouraging the new members to come and speak in the podium like this and given an opportunity and express our views. And very importantly, I want to thank my mentor, teacher, partner, Mr. D R Venkatesh. He is known to be a TDS man. He has done more than 300, 400 seminars only on TDS. So I definitely take inspiration from him. So I thank him for all the support and encouragement is given throughout my career, and at the same time all the partners of my firm and my family members and constant my support and bearing with me for having chartered accountant practice, so without giving much of my time to my family members. I thank you one and all for patient listening, and it was very good session where we had lot of questions and answers. I hope I have expressed my view. My view might be a view, so it is not a conclusion. So you need to take opinion based on the circumstances. I thank you one and all. Thank you very much.
That was indeed a fantastic session, lively session. Thank you, sir. With this, we are concluding the last session for the day. Can I request CA Rajshekhar Gowda to come over to dais and then hand over a memento to the speaker? Thank you. Thank you, and let's meet tomorrow morning.